never talked about it, but I hear the blame is mine. And I call you up to say I'm sorry, but I wouldn't want to waste your time. 'Cause I love you, but I can't take it anymore. There's a look I can't describe in your eyes. If we could try like we tried before, would you keep on telling me those lies? You know. Remember, there's no way to make up. 'Cause it seems you love.
Behind time, but we'll get straight to the event of the day. You're welcome to PRINVEST, our conference on property and real estate here and TV show. As I said, my job is not to come and waste your time, but to make things move fast as possible so you can make the best of your time and make the best of today. My name is Tayo Fagbole, editor of Business Day, and that's what I'll be doing today, to be your host. So I'll just go right away and invite our Managing Director, Business Day Media Limited, Dr. Oho Kitty, give us a welcome address. You're smiling, I hope I got that right.
Thank you. Yeah, very good morning to you all. Before I deliver my welcome address, let me just echo what Tayo said. Our apologies that we are starting this event very late this morning. And nonetheless, I sincerely hope that it is still worth your while and you're able to engage the activities that are lined up here this morning. So Let me welcome you all this morning on behalf of the publisher.
Recording in progress.
Mr. Frank Ibogon, and everyone associated with Business Days, and of course, the organizers of those directly involved in Pre-Invest Property Investment Show this morning. So I welcome you all distinguished chief executive officers and managing directors, and especially members of the real estate community, a community that has become very, very important and significant in our lives, especially in Lagos State, given the contributions that you make, and of course, the improvements that you are making to the way that we live and enjoy staying in this city. The press, ladies and gentlemen, and of course, everyone present here, you are most welcome. I'm very, very delighted. Actually, this is the first of our attempts at seriously engaging the real estate community. And we thought it's very, very important that we have a combination of conference, of course, and a property fair, and of course, a TV show, which I'm sure we show sometime later in the year. This is obviously, Business Day is not new here, but we are trying to seriously engage the real estate market, not only on our editorials and our conference platform, but we are increasing our commitment to the industry. So, like I said, our approach is a conference, exhibition, and of course, a TV show. And we hope it provides a unique opportunity for companies that are present here, and even those that are not here, to drive the thought leadership within the industry, exhibit, and of course, showcase their developments in the city of Lagos. Their products, their services, and of course, instead also their engagement beyond this conference, especially through some of the mails that we have shared on behalf of all those participating. So I really, really do hope that this serves as a very, very strong platform for engagement for the industry. After this event, we really hope that all the developers, investors, contractors, suppliers, and of course, would have found this platform very, very engaging, and of course, be able to drive their projects, including single-family mix and of course, multifamily developments across Nigerian cities. Of course, one of the things that we are going to get familiar with today is the numerous problems in the industry. All I'm saying, numerous problems affecting the industries. Despite all these opportunities, there are problems that we are all aware of. So I believe that all the panelists and of course all the speakers that we have lined up this morning, I believe that they would share their own thoughts, their own ideas, and our job, and especially the editorial team that is here this morning, is to take those messages and of course propagate them and project them even outside of this hall. I'm just going to read out a few of the issues that I believe will come up here, but this is definitely not an exhaustive list. So I really do hope that we can all engage these issues, and of course, hopefully also we can have some solutions preferred towards them. So we have the housing deficit. We don't have enough houses. I mean, there are still places where people are crowded. And of course, there's a cost issue around this infrastructure deficit. And of course, there's about how do we build affordable housings, there's foreign exchange issues, pressures, devaluation, and of course, discourages to our investment, real estate, access to capital, abuse of property rights. I mean, whichever way you look at it, I believe that the industry could do better if and only we could address some of the problems that they face. So it is my hope that the discussions that we're going to have here today will be very robust, and hopefully we will have some workable solutions here. Our commitment as a business publication is to continue to project the issues that not only that we already know, but also the issues that will be raised here this morning and then, of course, tomorrow. Before I leave this place, let me personally and on behalf of Business Day thank all our sponsors. We have our lead sponsor, Ackland Group. Thank you so very much. And of course, our gold sponsor, Purple. Our other sponsors, Nigerian Mortgage Finance Company, Lafarge, Mr. Romas, Asafina, D207 Designs and Project, Eco Development, UPDC, NEC Revolution Plus, P1 Haven, Abe Mortgage, Lifecard International Investment, West Africa Royal Ceramics, Brawl, Landman Africa, Remax Nigeria, Asset and Equity Limited, Elan Construction, and Homeland Properties. So I thank you all, and including also our press partners, Pulse, Trace TV, Television, Continental, and of course, Genesis Cinema. I welcome you all to this combination of conference or exhibition. And of course, I will also, and I hope you'll be able to watch the TV shows when they are done sometime later in this year. I really, really do hope that you have a very enjoyable time here this morning. And we look forward so much to your contributions, either here on this side of the table or the questions and the comments that you may have from the floor. I thank you all. A very good morning to you.
Thank you. Thank you very much, Dr. Okiti. So keeping to my mandates to make sure things move smoothly and without hitches, I'll go right next. We'll skip the exhibition tour. I think we've toured enough, but I think we can do that much later during the break. So we'll go straight to our keynote speech, which will be by Dr. Andrew Nevin, who is the Chief Economist of PwC West Africa. He'll be joining us via Zoom. So if we're ready, we can put Dr. Nevin on to give the keynote speech. Dr. Andrew Nevin. Oh, there he is. Good morning, Dr. Nevin. You need to unmute. Welcome, Dr. Nevin. Please go ahead.
Can you hear me? Good morning.
Good morning.
Can you hear me?
Yes, we can.
Okay, I apologize. Again, I'll add my apologies. It's not easy in this modern world, but very happy to be with you. I'm in Abuja. Of course, I spent a decade living in Lagos, but now have decamped to Abuja. So it's a big change for me. But I really miss Lagos. I'm very happy to be with everyone this morning. So I'm just going to take a few minutes. I know we have run over time, so I'll take about 10 or 15 minutes. And I want to start by saying the reason that I accepted from Business Day and from my dear friend Frank, the publisher, to be part of this is for years I have been, and PwC has been very clear that the most important industry for Nigeria for economic success is real estate. Now, why is that? Real estate is the largest asset class in the world. About 2/3 of the world's assets are real estate. Everyone needs a place to live. Everyone needs a place to work. Of course, in the COVID world, the place to live and the place to work may be the same place. But real estate also drives so much positive economic activity in every economy. So when you build out real estate, build residential real estate, you need to source local materials, which creates employment. Of course, when you build the real estate, you have the carpenters, the masons, the electricians, the laborers. You also have the caterers that feed the men, usually men, on the site. And after someone purchases a home, over time, they have to furnish it. So they're buying furnishings and other things to build up the home. And I've seen this happen in country after country. In my own case, my parents were immigrants who bought a house in 1968 in Canada. And it really was the foundation of the economic success of Canada was the real estate industry. So it is the most important industry. And for 6 or 7 years, we've been speaking, and I've been speaking about the criticality for it to be successful for Nigeria to move forward. Now, I know all of the problems in the real estate industry, and everyone in this room knows the problems. But despite that, I've actually been very encouraged over what I've seen in the last 2 or 3 years. If we go back 4 or 5 years ago, there wasn't much activity. And today, despite all the obstacles we know, so the titling issues, construction issues, difficulty in getting a mortgage issue, we are still seeing a tremendous amount of real estate activity across the country. So I just, for example, was spoken at a conference in Ibadan the other day about real estate. I accepted that because I was really excited to see the real estate activity across the country. So in Oyo State, in this case, I know a lot's going on in Edo, for example, and I'm sure it's going on across the country. So it's very encouraging on that. And I think that particularly I'll say to the young people today, I think the real estate has a great future. If you think of your financial success over your lifetime, in so many cases, people have built their financial success over successfully owning real estate when they're young in their life. And then as an economy grows, the real estate becomes more valuable. And over time, that builds up a tremendous amount of wealth as you acquire more property. So I'm very optimistic about real estate, despite all the challenges that we all know. So I just wanted to share a few slides to back up that optimism on there. So let me put up a few slides. I won't, sorry, I'm just moving my, let's put it on slideshow. I won't present too many slides, but just to, as I said, kind of back up what I said about real estate. So if you think about the fundamental driver of real estate and real estate values, of course, at the end of the day, it's people. So it's an important question, how many people are there in a country? This particular chart, and all these slides where people can have if they want at the end of the conference. But in this particular slide, we just show the populations of the world's largest, most populous countries: China, India, Nigeria, United States. I think everyone knows that Nigeria is going to surpass the United States in population by 2050. But this particular slide shows population in 2100. And under this scenario, the population of Nigeria exceeds that of China on that. So let me repeat that. You've grown up in a world where China was always the most populous country. China's population is already shrinking. Its real estate values are falling. Those of you who follow this closely might have seen the Evergrande crisis, economic financial crisis, where their largest real estate company is now bankrupt. Because when there's less and less people, there's less and less demand. But for the rest of the century, Nigeria is not in that situation. We're in a situation where there's going to be increasing demand for real estate, and it's impossible to see a situation where the value of real estate actually falls on that. As I said, despite the challenges we have in our country. So I said you can get this whole presentation, but just I wanted to highlight a few other points on that before stopping today. So I wanted to start out. We have these 10 themes. These 10 themes that we discuss. I'm going to discuss maybe 3 or 4 of them that are relevant to real estate. And I want to start out with the dead assets. So PwC put out a paper a couple of years ago where we said that one of the biggest challenges in the country was what we called dead assets. So these are assets that are not producing a return. And some of these, you all know, of course, the government assets, so things like Andrew Steel, the National Theater, the National Stadium, the refineries, where there's Nigerian resources being used and the country is not getting a return. But the largest part of dead assets are when the real estate market does not work well on that. Because when the real estate market works well, you can borrow against a property, say to start a business, or if you have a property in one part of Lagos, maybe you sell your property in Acacia, you move out to Epe to start a business with your sister. You have to be able to rotate those assets, be able to buy and sell those assets, be able to borrow against those assets, and then to become moving from dead assets to live assets. So we put out the paper to say this was probably the most urgent economic issue. And of course, when real estate assets are dead, it becomes very difficult for the real estate industry to develop because it's dependent on people being able to buy and sell assets. The developer has to know they have title to the land before they can invest in it. They have to know they can easily transfer to the buyer. The buyer knows that they have to have clear title on it. So really, we put this at the top of the list on there. And the other reason, of course, it's critical too, is from the viewpoint of the government raising tax revenue. Land is the best place to tax. It's because it's basically immovable. This is something that's been known for about 150 years in economics. And some governors, including His Excellency Governor Senator Olo in Lagos, has been very clear about this, that also the other reason to develop real estate is to create a tax base on that. So we put out the paper that said $900 billion worth of dead assets on there. But the good news is we see the country turning these dead assets into live assets. So the government, for example, the refineries are working on, Andrew Steel is working on, the National Theater is working on being redeveloped, of course, into real estate. But simultaneously, we see a lot of work going on so that the real estate assets are live. And in Lagos, for example, there's been a huge amount of work by both His Excellency Governor Mbodi, but also now His Excellency Governor Senator Olo on the GIS system. So it becomes much clearer who owns the land titling to essentially turn that dead asset into a live asset. And I think for the group that we have today, despite the challenges, I think you should be very encouraged with the direction of travel with the real estate industry. I think there's now widespread understanding that it needs to work for the country to be able to move forward. Another issue I just wanted to raise with the group, which is also very positive for real estate, is the level of remittances that come into the country. So it's probably about $25 billion this year officially. I think unofficially it's probably $35 billion because, of course, a lot of people transfer with the Aboki system. Why is that important for real estate? Because one of the biggest reasons that the diaspora wants to send money is to buy property. Either they buy property for their parents, for example, or they're building a house for themselves when they come into the country. So I think for the real estate industry, it needs to build residential housing and structure transactions so that it can attract this diaspora investment. Obviously, the Naira is very weak right now. So for someone who is working abroad and earning British pounds or earning the US dollars, they find it attractive to want to invest into the Nigerian market. And I think it's critical that this group taps into that development. A third thing I wanted to comment on is just the development path for Nigeria in general, which I think will ultimately be very positive for Nigeria. So I think that there are many people that sort of look at the economy and say, well, we need to start low-end manufacturing. So we need to have a similar development path to Vietnam or South Korea or Bangladesh, for example. We're saying something different. We're saying actually Nigeria has a different development path. Our development path needs to be based on high value added services. So this is a business process outsourcing, coding for employment, cultural industries, financial industries, Nollywood, and of course, one of the biggest exports is football, where we have superstars like Ndidi and Iheanacho who have a transfer value up to 60 million euros on that. So it's a much better strategy for us to export high value added services. But the great thing about these high value added services is increasingly people don't need to leave Nigeria. They can do it from Nigeria. So they can earn a much higher salary, in some cases a close to global salary or even a global salary working in Nigeria. And I hear every day of examples of people doing this on an individual basis. So someone gets hired by a European bank, they're paid in euros, they're paid a European salary. They can do their work remotely. The bank is happy because they don't have to move someone to Europe to take up this role. They can start immediately on that. Now, why is this important for the real estate industry? Well, the real estate industry is really driven by the purchasing power of people who can buy the houses. So if Nigerians have a greater purchasing power through doing these jobs and high value added services, you're going to find the real estate values go up. So from your viewpoint, you want to encourage policies that have more and more Nigerians working in the high-end services on there, whether it's coding for employment or business process outsourcing. I mean, to give you one example, you may be familiar with Microsoft just announced they're going to have a development center with 1,000 people in Lagos. And this is going to happen more and more frequently. And that increase in the salary level of Nigerians who are now part of global value chains is going to bode very well for the real estate industry. I mean, those 1,000 people in the Microsoft office are all going to want to buy real estate in Lagos. They're all going to be high earners on that. So you want to see that economic success coming through to the real estate sector. I think the other thing that is really critical for the real estate sector is that we have growth across the country. So I just mentioned I was did a conference in Ibadan for the real estate sector. As I said, I was very happy to see what Oyo is doing in the development of Ibadan. I'm doing an event with His Excellency Governor Obaseki on Tuesday here in Abuja. I mean, amazing how Edo's developing. It's very important for the real estate sector that we have growth across in the secondary cities and the capital cities and other cities outside of Lagos. So you're probably aware that Lagos they estimate 30% of the GDP of the country. That's too high. It puts too much pressure on the Lagos infrastructure, creates problems for the real estate industry because, of course, when you're trying to build out real estate, when there's so much infrastructure pressure, and it doesn't work very well. I mean, as you know, people that also long distances away because of the high price of land, and that causes complications in the movement of people around the city. So from a real estate industry perspective, you have a great interest in seeing development across the country. And of course, it also means, and I'm sure there are professionals today, developers today's session, who develop real estate outside of Lagos, in the Ogun State, Oyo possibly, Ocean, maybe further away. Nambra, of course, is going to boom under Governor Saludo on that. But for the sector as a whole, we need growth across the country on there. So, and let me finish today by just something that's just important for the economy in general, not specific to the real estate industry, but you should be interested in it, which are the three big subsidies. We really are struggling because of this. I mean, you might have seen the headline now that His Excellency President Buhari has received NAS approval for a FOIL subsidy of 4 trillion naira this year. I mean, that is extraordinary. And ASU, the university union, came out this morning or yesterday and said, how is it possible that we're subsidizing FOIL for 4 trillion naira and yet we can't find 2 billion naira to be able to pay the professors what they were paid for. So this FOIL subsidy is something that the country needs to address. We were close to eliminating it in a few years ago when oil was about $30 or $40 on that. The chance slipped away. The subsidy has come back, and it's consuming the nation and weighing on the economy. And of course, the real estate sector only thrives in a good economy. And the last thing I'll say today is just the exchange rate. I mean, we understand what the CBN has been trying to do to direct the scarce foreign exchange into the highest value use. But overall, you know, we're of the view of PwC and have said for years that it's being counterproductive. It creates distortions in the foreign exchange market. It makes it very difficult to run a business. So, for example, and this applies to real estate or the building materials sector. I mean, you may have a business where 85% of the value added or 90% of the value added is in Nigeria, but you still need to import some spare parts or some particular component or ingredient for the manufacturing. But because you don't have access to FX in a systematic way, that doesn't happen. So, as I said, we understand why the CBN has pursued this policy, but ultimately we believe that experience has shown that it has been counterproductive for the country. And we'd like to see us go to a unified exchange rate and just much simpler to be able to conduct your business. And of course, the real estate sector is going to benefit from that. So let me just stop there on that. I know we're short of time. And again, but just to reiterate, real estate's the most important sector in the country. It drives employment, lifting people out of poverty. Everyone wants to own a home ultimately. When the real estate sector does well, the whole economy does well. So it's critical for the industry to come together and do the things that are necessary to advance it. So, you know, what are some of those things? Titling, of course, and the way the transfer of title works is critical. We cannot invest in this industry. People cannot own homes or commercial real estate unless the titling is clear. And you know, that has a lot of complexity, traditional land rights. It's not as though all land should be under that titling system, but the land that's for private residential development needs to be clearly titled. It needs to be able to be transferred quickly and efficiently. You need that to be able to create a mortgage market, which of course, you know, people can't buy their homes, shouldn't be required to buy their homes all in cash or build them piecemeal on that. So the industry needs to come together to make sure that we achieve the potential of it. And of course, I will keep repeating publicly and to all the government officials that I interact with that real estate is our most important sector. So I want to thank you this morning for spending time with me on that. I hope some of the points that I've raised are helpful for your deliberations and thinking today on that. But I really wish everyone in the real estate industry great success. I'd like to see all of you build great housing, great commercial real estate, great industrial real estate for the economy. And I'd like to see all of you do very well financially on it, because I think real estate is based on every other country in the world. And given the demographics of Nigeria and given increasing prosperity, real estate is going to do extraordinarily well. So thank you so much.
Thank you very much, Dr. Nevin. Hope you can hang around for a few minutes, Dr. Nevin.
Absolutely. I want to listen to the next sessions.
Fantastic. So we'll just hold on and see if we can take questions from the crowd. We'll just take two. We're short of time, but I'm sure the people who will be interested. If you're interested in asking Dr. Nevin a question, you can raise your hand. Comments, questions. Okay. Okay, the gentleman here. Can we have a roving mic, please?
Good morning. My name is Taufik Olatunwo from Nigeria Mobility Finance Company. Thank you so much, Dr. Nevin, for the presentation. And I particularly like the data you presented for us across the economic lines. There's one particular data around the deficit that we have, which we quoted at 7 million. We've been having a series of issues around that between 7, or is it 17, or is it 21 or 24? I don't know if there's something that jumps out of this that you can explain. And again, looking at things from the shift from GDP to SDG is something that I like. Thank you very much for that.
Well, thank you so much for that.
Thank you.
That's a very good question. Or do we want to take another question?
Yeah, I think we can take one more and then you can take both of them.
Okay, good day. My name is Peace from Open House. My question is, seeing as the housing deficit, according to your statistics, was 7 million, and then you estimated that about 700,000 houses will be built annually to fill that deficit. What's your, how many years will it take then to fill? What are you looking at to fulfill the housing deficit? Thank you.
Okay, thank you for those questions. Yeah, so on this housing deficit issue, I mean, obviously there's been a lot of controversy. People may be aware that the World Bank came out and said 17 million. And then His Honorable Minister, or His Excellency, Babatunde Fashola, came out as Minister of Housing, and he said, I mean, that just is complete nonsense, right? Because that would tell me that there's 85, if each household has 5 people, that would tell me that there's 85 million people who are homeless in Nigeria, which is not accurate on that. So I think our view, and we just worked with the Ministry of Housing on the National Housing Strategy. I think in the way we did it was not sort of say housing deficit so much, but I mean, just as important is substandard housing. So I think the number we came out with, there is a deficit of about 7 million units. And then there's another 7 or 10 million units that are substandard. So these are people who live in housing that is just not adequate. And if there was better built housing for them, they would want to move to it on that. So that's our basic view. The 700,000 units a year was what we felt was kind of necessary to start to close the gap in a meaningful way. But I think one of the implications of all this is that your industry has at least, well, I would say 20-year horizon of success in Nigeria because of these demographics and because of you can't build 7 million units all at once, right? It takes time and planning, and there's only going to be, and you don't want to build it all at once. You build it over time. So I think for the young people today involved in the industry, I think you've made a very wise decision because you're going to have a long period of time when there's always going to be a high level of activity on it, on that. But the 17 million, we agreed with the Honorable Minister. We felt that the World Bank was being provocative in putting out that 17 million number because it isn't really meaningful. You need to think of it in terms of the deficit, like houses that don't exist, but also the substandard ones. And when we did the work with the ministry, we kind of were much more nuanced. And I think we defined actually several levels of substandard on that. But at least it will take, to Blessing's question, it will take at least 10 years to close this deficit, assuming that the building's 700,000 per year. But of course, at the same time, the population continues to grow. So even if we build 700,000 units per year, in 10 years, we'd still have more units we need to build as we've got a growing young population. I also just want to add, I think something, I'm sure it's obvious to most of the people, but most of the housing we need is in lower middle class and middle class. So you have people at the bottom of the pyramid who cannot afford market priced housing, and there has to be some sort of thinking about how social housing works. But for then the next socioeconomic groups of the lower middle class, which is large in Lagos, you have to design houses that are appropriate for that group, and the price points, the building materials, and still adequate. And then for middle class, I mean, one of the problems we have in the housing market in Lagos, of course, is we have a lot of empty real estate in Victoria Island and Ikoyi. I mean, if we're honest with ourselves, the reason for that is because a lot of those properties are purchased with diverted funds. So someone that's diverted funds and purchased a Ikoyi property isn't going to rent it out, isn't going to advertise it. It's just going to sit there vacant. And that, in a sense, is another dead asset on that. But that is not what the real estate industry should be developing. It should be developing houses that the lower middle class and the middle class can afford, which also requires cooperating with the mortgage institutions and the financial structures there so that people can afford them. I had a mortgage when I lived in Lagos. I owned a property in Lucky and had a mortgage. It was 21%. on that, and that's not something that is easily affordable by many Nigerians. On the issue of SDGs, not GDP, yes, I left that slide up at the end. I mean, one of the things that, we didn't have time to go through all the themes. So one of the things that is very important to us at PwC is we would like to see Nigeria, and I think Nigeria's made a lot of progress, just think more in SDG terms. GDP is an abstract number, and it doesn't necessarily translate into human well-being. I mean, particularly, for example, if you have very high income inequality. So if we go back to the period 2010 to 2014, there was very high GDP growth. But almost all of that GDP growth accrued to the wealthiest people on that. And so just reporting GDP growth of 6%, 7% really isn't a positive sign. You have to know what's happening broadly across the population. So we like the SDG, framework because and I'll just share it again, just because it's really related to what matters to people, right? So if you think about it, you can't eat GDP. So what you really want to know is, no poverty, quality education, affordable and clean energy. And we're getting better and better at being able to measure these things. So I've actually come out publicly at times and said, why don't we just stop measuring GDP? It's not helpful. What we should be measuring is our progress on these SDG development goals. And of course, many of them fit together with the real estate industry. So sustainable cities and communities. I mean, that is really your responsibility to be a part of that. Clean water and sanitation. Of course, when we build out real estate, if it's not built in a way that you can have clean water and sanitation, that infrastructure, it's not going to be successful on that. Decent work and economic growth. I mean, so that goes back to what I said before about the role of the industry in creating good jobs for people, both men and women in the manufacturing, the building materials, in building out the residential and commercial real estate, et cetera. So responsible consumption and production, the way you build the houses, are they also fit for purpose for our climate and our conditions on that? So I would urge everyone in Nigeria, including the real estate industry, to be thinking very much about the SDGs. I mean, another one here is affordable and clean energy. So what's the energy source for the housing? And of course, I mean, solar is the obvious one. It has some complications, but we're seeing more and more people being able to structure solar so that it works to power. For many of the banks are powered on solar. I've had more and more people moving off the grid powered on solar. So you're at the center of everything. You're the largest sector in the world, as I said, and you have a big role to play in Nigeria being able to attain these SDGs. So thank you. Thank you so much.
Thank you very much, Dr. Nevin, and thank you for your time. So we'll move on to the next scheduled activity, which is Dream Residential Communities, Closing the Gap. Delivering this will be Ayo Ibaru, who is the Chief Operating Officer and Director of Northcourt Real Estate. Mr. Ibaru. I may make an appeal, please. If we could all please come to from the end, all of you, please. If you all could sit here, please. I'll be very grateful.
All right. Good morning, everyone. Okay, if you can, please, the organizers would want us to come forward a bit if it's not too much trouble. Just there's a space in front of you and you can. It would help the ops of the event if you move forward. Thank you very much. So as announced earlier, my name is Ayo Ibaru. My pleasure to be here. Usually when the property columnist, Mr. Chukwu Aroko, calls me, I'm usually worried because he has some difficult questions to ask about Nigeria's real estate market. And most often I'm driving, so I'm like, this man just wants to give me unwelcome stress. But we've had quite a number of engaging conversations, and he's done so much for the industry. So when I got the invitation to come here, I couldn't but. So thank you, Business Days. Thank you, Chika, for all you do for the industry. So if we could have the slides up, that would help us greatly. I will attempt to interpret the theme for today's event, Dream Residential Communities Closing the Gap, and essentially we will discuss this in 3 parts. We will discuss this in 3 parts. Do I hold on for the slides to come up? So, and all go along on this. Let's give them a few minutes. Yeah. So that's what we're looking to do. We will take this in 3 parts. One, we'll go through an overview. We'll look at gated estates as a whole as the second part. And then finally, we will conclude with new towns. Again, we like to start with a global perspective on how residential markets work. And then we will drill that down into how Nigeria's real estate market works. And speak on a few new towns and developments going on around residential corridors. Can I go ahead, or what do I do? I hold on? Okay. All right. Yes, that's the right orientation. Fantastic. If you could just move to the next slide, that would help. The next 2 slides. Yeah, please, yes, go on. We're almost there. All right, next slide. Okay. All right, thank you. So internationally, the value of real estate assets rose by 5% to close out at $326.5 trillion in 2021. That's globally. I think the important thing to note here is that the residential real estate market accounted for 79% of this investment. So what this means essentially is when corporates or individuals want to store value in the real estate market, the zoning, or at least as far as 2021 is concerned, they placed an emphasis on residential real estate. Now, last year, at Northport, we also conducted what some may consider a comprehensive study of gated communities, or what we would call estates, along the Lekki corridor, and we estimated that corridor alone has well over 85 individual estates, and then of course 13,000 plus individual residential units. Now the study is still ongoing, and we should have it done soon, completed of course. We also saw an increase in foreign investment. So in conversations that I have had with quite a number of developers, you find that quite a number of their assets are going directly to investors who reside either in the US or in the UK. I mean, that's my long way of saying the developer is building 10 houses along the Lekki corridor, maybe 6 to 7 are going straight to people who live abroad. If we can go to the next slide, please. So we use a number of tools, third-party tools, to meet movement of individuals in Nigeria. Now, this does not have any, doesn't mean individuals are being tracked. We look at aggregate movement. And for the year 2021, if you can look at the screen, the area we have in gold tracked residential movement. And what you find is that that was the highest place where people spent the most of their time throughout 2021, starting from January to December. That was followed by retail use, so that's groceries and pharmacies. Third was retail, but with an emphasis on recreation. And then finally, in the red line, we have workspaces. So this just essentially says, increasingly, we are spending more time at home, and that just supports the fact that we saw earlier that the demand for residential is on the increase. Next slide, please. Starting with gated estates, we find that because of how security and infrastructure being handled by the central government, as much as they are trying, it's not encouraging for most people to rely on just open residences. So as we will see later, what you will realize is increasingly people are choosing to live in gated communities, largely because, again, of the security features, the social cohesion that you will find, and then, of course, the exclusivity that it provides. Next slide. Just skip that. Next slide, please. Okay, so this is a 5-year trend of leading estates, as we would call it, in Lagos, and you would find that bar none, they have all increased in their rental prices from 2017 to 21. For some of them, you would realize that the jump between 2020 and 2021 was rather higher than you would have found in other years. Reasons being because the need for security, the need for comfort and convenience in the event of yet another challenging situation bubbled up to the minds of many people. But what I want to bring out with this slide, and also the next slide, is the fact that rental prices, sale prices for locations, for houses, residential apartments in gated communities have continued to increase. Now, again, this is my way of saying if you were going to invest in an apartment and you had two options, one was just in a good location, but maybe close to the road or not so close to the road. And the second was in a gated community. You know, it does make some sense if you invest in the asset in the gated community, because users, renters, even buyers are finding it easier to lease, to occupy residential apartments in these locations. Next slide, please. Yes, this is also what we have for sale prices. They've also gone up, again, supported by the fact that work from home is not going away as quickly as many thought. The corporate world, most managers are trying to get staff back into the office, and globally, the average success rate of that is about 35%, 37.3 at the most. That is, you know, how easy is it getting staff back into the office. This is even largely for knowledge-based workers. But suffice to say that the sale prices for 3-bed apartments in most gated estates have been on the increase. The last 5 years, a bit of that increase came in 2020 to 2021. Let's move to the next slide, please, where we see what the drivers actually are. There are quite a few: similar houses, globalization, prestige. But then again, I would focus on the bottom right, which is the private local government. So in gated communities, quite a bit of what most people have to deal with living in Lagos, Nigeria, or in Abuja, or in Port Harcourt are sorted out. Things like water, roads, power. Now, this was largely the case until a couple of weeks ago, where we began to see power costs go up, largely because of challenges we're having with oil prices, oil markets, and that funneling down into the costs of maintaining apartments, and then have facility managers having to renegotiate or revisit what the service charges are for living in gated communities. But one of the key drivers, again, is just to reiterate the fact that in gated communities, you don't have to, I mean, you might have to pay more, but you don't have to worry as much about the basic infrastructure, power, water, and internet in quite a number of the cases. Again, prestige for most residents in Lagos is important. People like to know that they're staying in a good place. Same thing goes for Abuja and Port Harcourt, with a few variances in between. Now, this happens in second-tier cities, but you find that the concept of new towns seems to have more, it's slightly more welcome because of the price points or entry price points for new towns in second-tier cities. But we will speak more on that as we go on. Gated communities also have their challenges, which we will see on the next slide. Because of the quality and the caliber of people who live in gated communities, they still have security challenges. In some instances, they are even more of a target. So you find that there's hardly a month where most security firms watching these gated communities don't have some meeting introducing some new concept around security. So security is still a challenge. Although, of course, it's being dealt with as frequently as this operating. Again, high maintenance costs. Gated communities, especially the really, the well-serviced ones, are high maintenance. It's expensive. Service charges have gone up in some cases by 20, 30%. There are a few outliers where service charges for maintaining assets in gated communities have gone up significantly, but by and large, we're looking at about a 50, 60% increase in maintenance. Let's move to the next slide so that we save some time. The next slide, please. So the merits and the demerits, part of what we've been trying to discuss till now are all put together here. The main merits for gated communities are, of course, security. Security is key. If you're living in Nigeria or if you have an asset and you want to lease it out quickly or you want to sell quickly, it helps to highlight its security features. Of course, there's less traffic, and then there's the exclusivity concept. Serenity is also important because living in Nigeria's core cities can be loud and really affect mental health. It's important that gated estates optimize for serenity, and one of the largest gated communities in development right now is focused on serenity, green spaces, healthcare, and wellness, and it should be ready by 2030. The demerits again include the estate rules and policies. So there's always something new. If you live in any of these gated communities, there's always some new concept. There's always some new protocol. Today you have to call the gate. Tomorrow they have to send a code. Next day, you have to send another code for the same person that came yesterday. And God help you, you're trying to repair something that takes 2 or 3 days. Every time the artisans come in, you have to call the gates. Whether you are in a meeting, whether you're trying to pick the kids up from school, that frequent conversation or communication with security can be rather frustrating. And I will just add here that social segregation is also something you find in gated communities. You find people just saying, once I get to my house, I am okay. I don't need to go out. I don't need to meet anyone. I do not need to involve myself in any of the issues going on outside. Let's move to the next slide, please. We will now go quickly into new towns, which is our part 3. Let's stop there, please. So new towns are designed from scratch, and the basic idea is to work according to a master plan. Now, this master plan might have quite a number of objectives. Number 1, you want to decongest the urban center. Number 2, you want to, well, in some cases, stop people from moving to other states, so governments don't want to lose that revenue. And again, it's also another way to increase the potential revenue for developers. So what developers are doing now is, that's like mid-tier to slightly above that. What they're doing now is, aside from just building regular estates, they're going into building new towns, trying to get into that space. It's not as big as what the established players would do, but the idea is if we can create not just an estate, but a series of estates in a new town, chances of profitability are much higher. But the basic concept here is that new towns are planned from scratch. And again, one thing is they intend to avoid the existing problems of the city that is nearby. Now, the challenges now become building a strong enough core to attract buyers or renters, because you can build a new town, and we've done quite a number of studies on that. If the core isn't accurate and a few things supporting that in place, new towns just remain good stories that take a bit too long to bring results. Next slide, please. The new town development theory hinges the concept on three elements: the economics of the process, because at the end of the day, you will have to buy land from the locals, from the community. You would have to bring in infrastructure. If you're trying to do it in Nigeria's core cities, you would have to bring in your roads, you would have to bring in your power, you would have to bring in your drainage and things of that sort. And that can this model for new towns. Again, spatial measurements and visions are also critical. And finally, the social elements, which is something that quite a few developers are catching on to, which is regardless of how big or how grand the project is, it must incorporate social elements. I have success factors here. We can just skip that slide. It's the next one. And then we go into emerging corridors. We go into emerging corridors. Yeah, we can skip that, please. Next slide. Thank you very much. So the Arepo buffer corridor has been around for quite a while. It's not always as loud or as popular as the Lekki-Ekpe corridor, but you find that quite a number of assets there are doing well, and it's almost as if people just stay there and then they come directly to work in Lagos. So the trend that we can see for all three of them for their rents is increasing over the last 5 years. I mean, this data starts from 2019, but if you go further back, you will see that there has been growth. Growth might not be as stark, it might not be as what would I use? It might not be as stark, or it might not be as significant as one might have preferred, but it's consistent. And one of the things that help residential markets is the consistency in the investment. Next slide, please. Yes, this brings us to the Lekki-Ekpe corridor. No surprise here. Sangotedo, Awoyaya, and Ekpe have continued to see growth in property values. Now with the Dangote fertilizer completed and the refinery scheduled to be done by the third quarter of the year, we can expect further increases. Now, this will bring more people who will want to live in these areas, and quite a number of developers are working on projects. I think we can move quickly through the case studies. It's really Eco-Atlantic. I mean, I would be remiss if I didn't mention Eco-Atlantic City as one of the leading new town developments, West Africa, and by some arguments, in the whole of Africa. And you may be aware that the US consulate is investing $537 million between now and 2027 in the development of that consulate. So it's a good project, and it's going to also create more jobs and build up the value of residential assets in and around the location. Next, of course, is Alaro City. I think you might need to move. Yes, thank you very much. Alaro City needs little introduction. Another project by Rendevo, a company known for in its projects to conclusion. In the last 3 minutes, I will try to run through next set of slides, please. I'm closing the gap as we develop residential communities and as we go on into new towns, what do people actually want? So the following is a survey we conducted, took us a bit of time to determine what people really want along these corridors, and of course, around the general areas where you find our emerging and growing new towns. The first thing is house type preferences. 23%, 18%, 20% are still interested in having detached houses, but then you find 2-bed flats making a strong appearance. Then, of course, you have the 1-bedroom flat. So in and around cities, the preferences are still for smaller apartments. Details are on the side here. We'll probably share this after the event. Next slide, please. No surprise here, infrastructure, affordability, and convenience. People don't want to spend too much housing, but they want value for the money they're spending if they have to spend above the average pricing for 2-bed flats or 3-bed flats. Okay, next slide, and round this up. So, I mean, in conclusion, the residential real estate market in Nigeria is to expand. You find developers and even the government working jointly to take bolder decisions. And so we hope that as the weeks and months go by, we will have more projects go live. We will have new announcements around how the residential real estate market is growing, and where I will drop. That's where I will end this. Thank you very much for your time. Do enjoy the rest of the event.
Well, you know you're not going anywhere. You're on the next panel.
I am.
Yes. So maybe we should just have a seat. Thank you very much, Mr. Ibaru. Another round of applause for Ayo, please. Okay, so we'll go to the first panel of the day, and I'll call on the moderator who will do the introductions, and then we'll have, we know the program says an hour, but given that we've already used up most of our time today, we'll make it a 30-minute panel discussion, including questions. So I'm going to call on the moderator now. Just give me a minute to call this up so that we can go straight to the panel, which will be on infrastructure for growing cities, rethinking existing models to offer resilient win-win solutions for developers and states. And to moderate this session will be, I want to get it right, so I'm not sued for, okay, now I have it. The moderator is Tosin Ajose, founding partner at Deal HQ Partners. Tosin Ajose, please. Right. Please.
Good morning, everyone. Thank you very much to the organizers for this opportunity. I feel very privileged to be hosting the first panel session for this event this morning. So without further ado, because we're already running very late, please let me quickly call out the panelists that will be joining me in this conversation this morning. We already have Ayo Ibaru, who's the CEO of Northcourt Real Estate. Please give him a warm round of applause. Thank you. Okay, please let me quickly call to the podium Mr. Odunayo Ojo, the CEO of UPDC PLC. Odunayo. Please, a resounding round of applause for Odunayo. Okay, while we're waiting for Odunayo, I'd like to call Rolake Akinkugbe Filani, the CEO of Mixed Africa. Sorry, the CCO, Chief Commercial Officer, Mixed Africa. And last but definitely not the least, please welcome Evelyn Edumo, the CEO of Ackland Properties. So we're still waiting for Odunayo. I know he's around. I saw him 2 minutes ago. Okay, we're just going to wait about 30 more seconds for Odunayo and then we start the conversation. Okay, so we're going to be talking about infrastructure for growing cities, rethinking existing models to offer resilient win-win solutions for developers and states. This is a very interesting topic because the organizers of PRINVEST want us to find a melting pot for government and developers when it comes to real estate. Thank God it's not my job to do the talking. I'm just going to be moderating the panel session and I'll be depending on my panelists to see how we can actually find, a point of congruence between government and developers when it comes to infrastructure development. So my first question is going to touch on, I'm going to take this round each of the panelists and get their view on this, and then we go to the more specific questions. So I'll start with you, Ayo, because of the benefit of your sitting position. So coming out of everything that has happened over the last couple of years, we are facing a lot of changes in global realities across the world, in Africa and even in Nigeria. And clearly we know that they are now dwindling public sector revenues. You can see governments making a lot of effort to see how they can reposition themselves and begin to draw in more revenue from taxes and other avenues. And of course, we know that there is consistent widening in the infrastructure gap across the country. So with all of this, and knowing that historically government has remained predominantly responsible for infrastructure development, do we think that it's still realistic to think that government should be predominantly responsible for infrastructure, given all of these things that we've spoken about? And how does this impact the speed of growth and development, specifically in Africa?
Thank you very much, Tosin, for that question. So all over the world, infrastructure investment is critical to the growth of countries, nations, and economies. Now, of the many things that a government can invest in, you look at healthcare, you look at security or national security, and then you look at infrastructure. Largely because infrastructure has a multiplier effect on how the entire economy runs. So take, for example, we did a study 2 years ago, early last year, and we concluded, of course, in conjunction with other studies that we had done, that the introduction of a main arterial road to a settlement increases the residential real estate values. So on one hand, I do agree with you that there is an infrastructure deficit. I do agree with you that the government is struggling with revenue. And I mean, that's something that we've been on for quite a while now. But if there were a faster I think it was a good idea when we raised the scope fund. I think it was also a good idea when the government borrowed for road infrastructure. Do I think the rates were fair? Do I think the agreements were on the side of the government? I think it could have been better. But for the end goal, I do think that the government would also need to reduce the complexities developers have to face in setting up infrastructure, because it's difficult. I was speaking with a developer, this is even 3 years ago, and he was like, "Ayo, this is how much I have spent on all my locations, putting together 3 kilometers of road." And I think it's worth the investment. I think it's worth the risk. I would also just say, where the government is able to raise funding for roads, I would want to hope that a bit more efficiency would be introduced to the process. I think in terms of disbursements, in terms of even the planning, in terms of drawing down on the investments themselves, I would want to say the government can lend money, or sorry, can borrow money through many of the instruments it has. But I would want more private sector participation in the actual deployment of the funds, because private sector players tend to have more on the line, when they are making such investment. So it's a difficult position. It might take a while to resolve, but I think it can be done.
Thank you very much, Ayo. Before we go to Rolake, I'd like to please call on the owner of Toyota Corolla AKB 925HB. Kindly repark your vehicle. The organizers have asked that we announce that you kindly repark your vehicle. Thank you. Rolake, please go ahead. What's your thought? Do you really think that this responsibility should continue to sit primarily with government, or you think that the private sector should be lending a hand out to support?
I think a starting point would be what exactly we're trying to achieve. So the theme is infrastructure for growing cities. And my sort of school of thought is that the way we develop our infrastructure influences the way we behave in our cities. So I think it's a bit of both. I can tell you that as a private investor, we're investing billions and billions of naira in infrastructure that should otherwise essentially be socially provided by the state. So I think there are obstacles that stand in the way of private developers, but a major challenge I see is the quality of that infrastructure spent. And so if you take a state like Lagos State, Governor Sanwo-Olu will tell you that they're spending 60% of their infrastructure spend on roads. But if you look at the dynamics of Lagos, this mega city, how many people do you think own cars in Lagos? I would say about a third, just under 50%, but yet we dedicate 100% of our roads to, of our infrastructure, transportation infrastructure to roads. And I think fundamentally we need a mindset shift here. Why do I say so? If you look at China, for instance, China has invested billions and billions of dollars in ring roads and road infrastructure, but guess what? They still can't get rid of the gridlock. Why is that? It's because places like Beijing and Shanghai are growing cities. And with growing cities, you have a population explosion. So I think we actually need a paradigm shift. Yes, we need governments and private sector developers to work together, to collaborate and spend on quality infrastructure. But I think we need to focus more on transit and other types of infrastructure. So what I'm not really seeing is how developers and the public sector can come together and join the dots. So everybody is operating in silos today, right? We're focusing on our residential communities, we're focusing on our gated estates, and there's nothing wrong with that. But infrastructure is all about connectivity. And so my school of thought is, insofar as interstate infrastructure is, roads are great, but if you look at the landmass of Lagos, right? The question is, when we introduced BRT, I mean, it hasn't been a perfect initiative, but it was a fantastic initiative because it helped to decongest. And actually, from a returns on investment perspective, I think within 18 months, the private operator of that particular system, they made their money back. So I believe that we need to start thinking in a mega city like this, how we improve the transit nature of our infrastructure. So we need to look at rail, we need to look at light rail, we need to look at BRT. And from a developer's perspective, it's really about how we can come together as an industry to join the dots. So yes, I'm investing in my roads, I'm investing in my feeder roads, I'm investing in my drainage, but what about the rest of the transport system? So if I'm building my gated community, and as Ayo said, if I haven't ensured that the core is right, how am I really going to attract people to live in that community if the rest of the infrastructure network is not up to scratch? And we need to take a lead from what other cities are doing around the world. I mean, I would hate to compare Lagos with just any city, but I'll give another example apart from China. In Los Angeles, for instance, recently the state authorities, so the state legislation recently voted in favor of a $400 billion bond for transit infrastructure, and they voted zero funds for expanding the road network. Because what they found is that it actually doesn't significantly improve congestion because they have a major population challenge. And the final point I would really make is how we can collaborate across state borders. As you know, if you want to build and develop at scale here, we have a hugely fragmented real estate market with lots of developers doing different things. But the kind of capital that will be required to invest in this infrastructure, no single developer can carry that burden on their own. So we need to start thinking collaboratively within the private sector, but we need to start thinking of how we create infrastructure corridors interstate and find ways of creating what I would call geographic equity. So residential communities are great, and I live in one. I live in a gated residential community, but one of the things that plays on my mind year in, year out is this continued, we're building economic enclaves. And I wonder how sustainable that will be in a city like Lagos. So these are some of the issues that we should really be talking collaboratively about. Thank you.
All right, Rolake, thank you. Evelyn, I'd just like to quickly hear your thought before we move to the next question. What do you think about this, infrastructural responsibilities sitting primarily with government?
Thank you, Tosin, and good morning to everybody. I share the same thoughts with my colleagues here, and as it has been rightly said, but I would want to even bring it back home first, that the quality of a good product, a good residential product, is in the strength of its infrastructure. While this responsibility sits heavily on the government, when the infrastructure of a real estate product is not sufficient, what happens is that the value of that product further dwindles. If you look at Lagos State, for instance, you see that the populace overruns the infrastructure that is available. You ask questions like, why don't we have a fourth mainland bridge, fifth mainland bridge? The number of cars you have on the road does not even, the roads cannot contain it. So the quality of infrastructure has to be upgraded. Now, if it is solely a responsibility of the government, I believe that there has to be a PPP arrangement around that. In our sector, we must form lobbyist group that would come together and work with the government to improve that. We cannot keep that responsibility solely on the shoulders of the government.
Interesting. I think that's what I'm hearing from this side of the divide, is that the developers are funding infrastructure to support their projects, not because they want to, but because they're left with no option. To optimize the value of your project, you have to ensure that you are building a livable community where the kind of people that you want in there will find attractive to live in. So I'm going to, go to my next question, which is, it's desirable for us to assume that government would, be able to carry the financial burden of providing the infrastructure that is required, particularly in a country like Nigeria, where the deficit is unimaginable and growing, in geometric progressions as we go along. But my question is, even if it's desirable, is it achievable? And if it's not achievable, are there other ways that we can partner governments to ensure that we have a better livable, society and community, and people like yourselves who are developers can continue to support, infrastructure, whether in your gated communities or in other kind of geographic communities that we build, but you are able to get some form of equities or some form of returns or value from the government for doing this. Are there ways that you think that we can support, infrastructure drive and development and still get value, maybe in the form of incentives, whether it's tax incentives, whether it's rebates on, other kinds of payments to government or things like that, where, money spent, you can get it back in some kind of way or the other. I would start from you, Evelyn, this time.
Well, yes, we would. I mean, it's extremely crucial that we work with the government. On tax rebate, I mean, we've had to do projects where we want to outtake a huge project, and we see that the infrastructure, like the road network, and other aspects of the infrastructure is not, sustainable. It does not agree with the standards of what we will be building. And then we've had to sit with the government to say, how do you come in? How do we all partner? And I would say that most times the conversation extends outside of the bandwidth of our own time frame. And so for infrastructure, we really always want to look at locations where, it's the environmental factors are met, the social factors are met, and mostly in Lagos, which is where we play heavily in, we find that as a problem. Now, have we had to even push further on projects where the government can come in and partner with us? Yes, we have. But the biggest challenge on that is the time frame, to push that conversation and see it come to fruition. And so then as a developing company, you know that you've talked with your investors, you've talked with subscribers that are buying the product, and then you have to wait on the government. The challenge with the government is the waiting time. And in those cases, you cannot extend your delivery time to accommodate that conversation. So you have to move ahead to ensure that you go ahead to deliver that project. And to be honest, like she said, it's an ongoing conversation. And just like Ayo, clearly reiterated, it's something that we have to keep, pushing on to see how the government can create policies where we can partner appropriately and work within the bandwidth of time and still be able to achieve a more sustainable environment when it comes to infrastructure. Thank you.
Let me ask a more direct question on the projects that you do in Mixed Africa. I know you have, a lot of them that are situated in new towns. Have there been situations where you're able to get some kind of, compensation or rebates or some kind of incentives from government for heavily, making those heavy spends on infrastructure development and even opening up those markets?
Yeah, I mean, Mixed Africa is a Pan-African company. We're in Nigeria, Senegal, Cote d'Ivoire, Morocco, and Tunisia. And one of the projects I will say that has really been the poster child of PPPs for us was a project called Residence Esafia in Morocco. Probably one of the best PPP housing projects you can think of. And why is that? And I think there are a few lessons to learn from here. First of all, public sector performance was fantastic. So you go into a joint venture partnership, the government and the private sector developers agree the terms of what each person is delivering, and the system is set up to completely incentivize performance, right? And that's on the supply side. So that was great because actually the government met the performance objectives in terms of delivery of the infrastructure. The second part of it was that the government was able to facilitate support on the demand side for offtake. And so in terms of the poster child and the incentives around constructing a large-scale project of that, not whether it was a tax breaks, the tax holidays, tax rebates, all of that was well structured and put in place. So I think part of the challenge we have is the bankability and the viability of these things. You also find in other markets that there's strong development finance support for housing. So you have people who are willing to underwrite the risk of many of these transactions. Obviously, sovereign risk is a major challenge, even when you're dealing with non-state actors, sub-sovereign actors. But when you bring it back to the Nigerian context, I mean, there's a particular PPP that we went into years ago. I won't name the particular state government, but it hasn't worked out very well. And that's the reality. And part of that is the political risk side, where you have a lack of continuity in public administration. So 1 minute you go into the state agency today, there's a different person there the next, and there's nothing wrong with the change of our influence. The question is the solidity of this and strength of institutions. And I think that's something we can do better to support many of these partnerships. And then the final point I will make is that one of the biggest challenges for us today in even backing a successful PP project is access to land. And this is a major challenge that I think the government hasn't really helped us as developers solve, in the sense that, you know, in Ayo's presentation, which was a great presentation, by the way, he was talking about new towns. And except you're a developer who has an extensive land bank, we've been very lucky in that sense. We took advantage of early opportunities. It's going to be extremely difficult for you, even if you have a fantastic project that is quite structured, without access to land. And access to land that will ultimately make the end product affordable for your consumers. That's a very important point, because as you know, when you're developing your models, the cost of infrastructure and the cost of land are usually factored into your eventual project economics. And for me, it's really, how can we solve this issue? And it goes back to this issue. We're building loads of roads. And if you drive down just along the Lekki Eke corridor, I mean, I live in Northern Foreshore Estate. I take the back route around Pinot Beach Estate. I see all these signs that come up, Ministry of Works and Housing. I see someone suddenly rushing to fence their land because Lagos State is about to build a road through it. And I say to myself, we have I guess, a scarcity mindset insofar as land in Lagos is concerned. And that's because we haven't developed an ecosystem that really supports people who come and bid for land to build things that will ultimately positively affect the entire ecosystem. So I don't know who can help us solve this land access challenge. Are we going to be reclaiming land in perpetuity? Are we going to be extending our borders into other states in perpetuity? When we talked about I think it was Andrew Nevin, the chief economist, that talked about the debt capital that resides in government properties and land. How can we as developers come together and sit with state authorities, federal government, and actually work out a strategy for the next 10 to 15 years? That means that every serious-minded developer who is building a new town or city that is easing the burden on the public sector, by the way, can transparently have access to bid and purchase land to develop this vision of Lagos that we also desire, or Nigeria. Thank you.
Thank you. Okay, I think Ayo wanted to say something, but before you do, let me just ask. So Rolake was talking, more about, getting value out of government through collaboration. But I would like us to first of all address, how do we get value for those developers that are not even doing any kind of collaborative projects with government? So if I've gone into a new town, I've developed this massive, community, I have spent, so much to even develop the road network, to even open up the city. Don't I deserve some kind of incentive from government? But what should we be looking at? How do we, begin to task government to incentivize, these developers? That's one. And then you may now speak to, PPP arrangements, how to ensure that, government is keeping to their own end of the bargain, and that they are only bringing to the table what they have the capacity to bring to the table, and that they are delivering on their own side of the responsibilities.
I mean, Tosin, it's a very good question you asked, and Rolake has, in my mind, done a good job of attempt to delineate the issue. I thought it best to try and add one or two things. Now, there was an incentive type program the government started, which was if you built roads of a certain length, you would get some kind of rebates on your taxes. And I think it was Dangote and a few that benefited from that. And I mean, it's all well and good. I guess the question is, can we have this for companies that are not as big? But I think those initiatives don't have to stop, and we can drill down with this. Right? Again, when you have developers executing projects of magnitude private developer, a private firm has quarterly reports, has half-year reports, have monthly billables, expenses, and things of that sort. And by that, I also mean, see, when you hear PPP projects and you drill deep into what's going on, the sad thing is generally the government likes to drive the conversation. Generally, they like to decide the direction in which the investment goes. And now you have really impressive investments as the Infraco project that's, is almost up and running. And the main worry for most players, private sector players, is who will have the final say in where those funds go and who will decide the investments. Because you see, governments generally, as well as they might be, are politically motivated, as we said earlier, and so they calculate in election cycles. But private sector players generally calculate in revenue and, yes, financial terms. And so for a developer, the more impact I make, the more access to capital that I have. But the government, just has to think of the next 4-year cycle. And more on that. So I was speaking with a developer who does quite a bit of work in Nigeria, and he came from one of our conferences a few years ago. And his assessment was, if you're going to do a partnership with a sitting government, you have 3 years in Nigeria. What that means is once the government comes in, it takes 9 months if the government is efficient to settle in. And so you have to break ground around that time. And you're running, regardless of what's going on internationally, you're running until maybe a year to the end of the tenure, because there isn't a guarantee that the government will come back the next tenure. And so that brings us back to the question of the strength behind our agreements. So while we can institute incentives, while we can get private sector participants to commit to agreements with the government, it does appear that we have a government that can change its mind. And when you're investing in a 30-year, 40-year master plan, you want to be sure that your partner is not going to change his mind, right? You want to be sure because you've borrowed funds, you've tied those funds, you've pegged those funds to different things, and you want to be sure that those funds reach where they are supposed to. So I guess where we'll have to hang this is, we do know the government can play a role, but the question we have to ask ourselves are a few, one of which is, are they willing to play the role they are to play, and can they play it well? You see, because in the average government meeting or in the average private public sector discussion, when you get into those rooms, you sense that they are well-meaning. You sense that they want things to get done. But you see, if you've been in the private sector for a while, you are more interested in how effective your deployment of capital is. And that's something that some public sector players generally have a problem with. They just want it to run through this village and run through this area because this is where I am from. Right. I mean, and it is difficult negotiating that sometimes.
Okay. So let's just move on. I want us to move on to something that is on a much lighter note and on a happier note. So one of the things that I heard all of you say in the course of your conversations is talking about connectedness, connectivity, and develop connectedness of all these our living spaces. So there's a lot that is going on in the multimodal transport system in Nigeria now. There's a lot of work that has been done in terms of rail infrastructure. And there are many cities now that have been connected with the railway systems that now work and are functional. You have people living from Lagos and they're able to get to Abeokuta and Ibadan in a few hours. You have people traveling from Abuja to Kaduna and other parts of the country. And then you have the rail lines that run within the eastern states, right? So my question is, with this introduction of a functional rail system, how has this impacted developments across those areas? Have we seen any direct, impact on real estate development? Has it impacted the opening up of new cities around, the corridor? Are any of our developers thinking of now building projects across, these areas because of, the direct impact of this rail systems that have been developed? Or has it not had any impact on real estate development at all? I'll start with you, Evelyn, and then we will go to Ayo and then Rolake. Fine.
Thank you, Tosin. If I get you right, you're asking if the introduction of infrastructure like railway, yes, rail infrastructure in other cities, because I don't think this is in Lagos, but in other interstates, you're asking, yes. Well, personally, to us, I would say that it has made any huge impact for us. We don't have land that runs, through across developments that we do. We majorly develop in the metropolitan area, which is majorly in Lagos, and we don't have any direct access to that system. But I believe for my other colleagues that have projects in those areas, they might be able to tell us how this has impacted them. Thank you.
Thank you, Evelyn. Rolake.
I think, Tosi, let's be realistic. You make it sound like we have thousands and thousands of kilometers of railway. We don't have that realistically. And actually, if you look around the world, ideally, when you build new nodes of transportation, commerce, residential, it's all meant to flood there. But we've started from such a low base in our country that the introduction of a single line from Abuja to Kaduna is really just get towards transporting people from one location to another. And let's be realistic. So along the entirety of the route of those railway lines, you don't see that many stops. You don't see, and this goes back to the question around interconnectivity. When you're developing infrastructure, you need to look at it holistically. What exactly are we trying to achieve? And the analogy I will give is, remember in the colonial days, one of the things the French and the British did is that they built rail routes from the hinterland to the coastal areas because it was mostly focused on trade and commerce and exporting it. So insofar as it affected us negatively, they had an objective and they designed their infrastructure to achieve that objective. This is why most of us are export-oriented economies today. So when I look at railways, in an ideal scenario, you develop a railway in an area where you can attract the residential demographic, commercial, the trade, the light industrial, the manufacturing. We're not there yet because we don't have an integrated infrastructure system. And I think developers, I think really I would throw down the gauntlet. We need to do more. We need to take more of an interest because we could be unlocking significant value for ourselves, which we're leaving on the table because we're not. So what stops us from sitting down to have a conversation with the Ministry of Transportation? What is your plan for the next 5 to 6 years around railway? The caveat I will say to this is that part of the challenge of infrastructure in our country is safety and security. We all know what has happened with the lack of surveillance equipment on some of these railway lines. That is why many of us are flooding to residential communities, gated estates, because safety and security has to be had alongside the development of infrastructure in our country, whether it's aviation or whatever. So I think for me, rail is great and a massive proponent of rail. But beyond the transportation and movement of people, it's not really having an impact on the real estate market because we're not having the right conversations yet. Yeah.
Ayo.
I mean, so I was going through a Harvard study. When was that? I think that was 3 weeks ago. And if you go back 3,000 years, what you will find is that communities have always evolved around a core, and they've always evolved around connectivity. Now, the original design behind rail was to move people around locations as quickly as possible, but also as cheaply as possible. And to do that profitably as a government, you need to move quickly. You don't have too much time putting up rail projects, or else alternative means of transportation will catch up, and then you have to extend, and then the roads will catch up, and then you have to extend. So at the end of the day, the government does have an opportunity to extract even more value from its assets, whether it's land, whether it's various space. And in fact, one of the things we saw when we were studying the Arepo corridor, just going outside Lagos, is that the road investments that Lagos State government did, slightly in partnership with the Ogun State government, did help to increase the value around the main road. So that main road that takes you into Lagos Ibadan Expressway. That said, one, rail has to move quickly in terms of development. But I'm finding that when infrastructure is slow, more often than not, the government has too much of a hand in it. You see, the conclusions are not too far-fetched. If we have efficiency in our spending, if we have efficiency, more importantly, in our planning, we will find out that rail transportation will help grow the adjacent markets. So whether it's residential markets, whether it's the industrial market. And what you find is that at the end of the day, governments can get more in taxes and get more in reduced healthcare spend. So see, just to build on the earlier comment around the comprehensiveness needed in transport infrastructure development, you find that if we have rail designed in a certain way, government has too much to gain. So I think to summarize, there is a potential for rail, but the speed at which we are going is a bit too slow. And that's understandable, because if you have a 4-year term and you're not sure you're coming back for another 4 years, and you have too many stakeholders on your neck, and there isn't enough by way of agreements and commitments to ensure that you behave a certain way, these projects will extend. These projects will take way longer than they should. Ultimately, rail transport can serve as the core for expanding development from the center of cities, taking it out. Because it's one thing, I mean, okay, so when you look at international markets, right, and I mean, what you typically see is you can't pay rents in New York, so, you know, you maybe stay in New Jersey, or you go out and then you just commute 1 hour in, 1 hour out. Now, those things can work in Nigeria, but we do have to control for our local environment. We have to control for our behavior as a people. We have to control for quite a number of things that we're not getting right there. But what we will find out when we do start to execute these projects as we should is we have left too much growth on the table for too long. And I think it's something that can be done. Can it happen as quickly as it should? I don't know, but I think it's something that we need to look into.
Okay, so we're being prompted to wrap up the session. I'm going to just stay with you for one more second, and I'm going to ask, so what do you think as a community, as a real estate community in Nigeria, what should we be doing differently from the private sector side?
Yep.
I'll just run through all of you.
Yep.
One point, what do you think we should be doing differently to actually develop a resilient developers market that is delivering value to consumers?
So one of the reasons why they formed the United Nations in 1940 was, if we are not busy shooting ourselves in wars, at least we're talking, right? If we are in a meeting and we are talking as members of the United Nations, we are not outside shooting. I've always believed in dialogue. I've always believed that things like this do kickstart conversation. Now, I think the government can be persuaded. I think the private sector has a duty to consistently discuss these issues. And a good example here, I think, would be taking it out of what we're discussing would be, you know, MTN's arrival and what they've done for telecoms. And I mean, if you want to compare what they've done by way of paying taxes and by way of even contributions to the growth of the economy, you will find that the government's decision to listen to the private sector to make that work has done a lot. And what I'm finding is, I think we can have these conversations. I think we can lay out what the rewards will be if the government will come in, and they can have the discussions they need to have in their circles. So, sure, look, why don't we do this? And a good example of that here would be the Fashola administration. For all its imperfections, he was able to make it clear that if we put projects and we make them work a certain way, everybody wins. Until today, we still have some benefits from that. So I will leave it at dialogue. There are quite a number of things we can add to that, but I would leave it at dialogue.
So driving value conversations is what I'm hearing you say. Rolake.
I would say we need capital to execute, these grand projects and this grand vision. Lots of developers are trying to do so many different things, and sometimes we're all trying to do the same thing. We all need infrastructure. Question is, where is the money going to come from? And then the second thing, so we need to be talking. We need to be talking about how we pool resources and we share resources to build infrastructure. The second thing is, I do think, without wanting to sound alarmist, that we need some sort of dialogue around the use and allocation of land in our mega cities. And Lagos is a good one, because I dread to think in 10, 15 years, what we'll be doing and where we will be building. So we actually need to have a conversation with state administrations around land use, actually federal authorities actually around land use in our country. Thank you.
You, Evelyn?
Thank you, Tosin. So I would hit on three things that we can do to see how we can improve this. One would be gearing towards building more sustainable cities. So for instance, take the PPP that was done between the federal, the state, and the builders of Atlantic City. When you enter a city like that, you can see that the infrastructure in there was built with ESG taken into consideration. By that I mean the environmental factors, the social factors, and governance taken into consideration. A city like that ensures that its sustainability over the course of time. Second thing I think that we can do better is to come together and form pressure groups and lobby groups and sit with the relevant authorities and see how we can contribute massively, because the private sector is best hit from the lack of infrastructure. Like we've all discussed here today, with government you have to deal with continuity from one government to the next government, and you're not sure of your funds being plunged in being realized, and then the bottom line still goes to the buyers, and the purchasing power of the average Nigerian cannot take the hit that comes from the capitalization effect of the infrastructure. So we need to do a lot of sit together, talk together, collaborativeness within our sector, and see how we can talk with the relevant authorities to push this. Thank you.
I don't know if we have opportunity to take questions. Are we permitted to? Or no? Okay, we will give room for one or two questions from the audience. Okay, this gentleman over there and then the lady. Yes, two questions, thank you. Please, your name and the panelist you would like to direct your question to. Thank you.
Thank you so much. Thank you for a very enlightening session. And Tosin, thank you for the way you use your questions to drive out the topic. My name is Peace Anomnes. I'm the founder of Female Lawyers in Real Estate Practice. My question is, what is the government and the real estate developers doing to ensure, just like Folake rightly mentioned, about use and allocation of property and of lands? Because currently a lot of developers have been occupying lands around Dangote refineries and not considering the health impact. Of course, some innocent investors just felt that, oh, it's another booming area, they just move to that area, but not considering the health impact. And what are the real estate developers doing to ensure that the health situations are put into consideration, considering the health impact that it will have? Thank you.
Because Evelyn has spoken about ESG, I would like her to address the question. So I don't know if you want to take a first go and then maybe Rolake can support.
Thank you, Peace, for that question. So I would start with the last leg of your question. Building environmental sustainable cities takes a lot of work. It's really, it is majorly the government's prerogative and private sector, like we rightly discussed. Now, on the government's prerogative, it's extremely important that infrastructure that guides environmental safety is put in place. Now, take into consideration the free trade zone that you've made reference to. Now, the land areas around the refinery are not supposed to hold any residential property. From the laws surrounding that area, you're not supposed to have residential property within certain radius around, that refinery because of, the substances that are emitted from refining. And it also falls back to us developers. A lot of us developers contravene a lot of the laws that guides the usage of land. So it falls back on us primarily to ensure that as we purchase properties around these areas, we stick to the tenets of what is agreeable environmentally. That's on one side. Two, of course, the government has a huge part to play. When you go to the land use offices, you see all sorts of things being done and inconsistencies here and there. Both parties have to really work together to ensure that the environment is safe, for use. And I think that a lot of people buying lands around them, most of them are using it for ports, for warehouses, for things that would not impact, the health of the residents that are around that area. I think that's what, we can do. Thank you.
Yeah, I agree with Evelyn. I think there are laws and we just need to apply and enforce the laws. However, as a private citizen, even before I came into this industry, one of the things I've always felt there should be is in this sector, certainly where land and urban use and development is concerned, there should be a whistleblowing mechanism. Because there are a lot of things that I see and I'm thinking, is that even allowed? Who is regulating that? Who is enforcing that? Now, I think Chelsea is smiling, she's a lawyer, but I personally, we all know intrinsically as human beings what a good and safe city looks like. We don't have to be technical or environmental engineers to do. There's some things that are pretty obviously just wrong. Second part of it is looking at the health implications. I think any serious-minded developer of skill today that wants to attract long-term infrastructure funding has to take ESG seriously. We have to take climate resilience seriously. And this is going to be an important point because China, for example, is spending 12% on their GDP on the health implications of emissions, just because of the way their cities and their towns were historically developed. So I agree with you. This is a matter that we need to take increasingly seriously. Otherwise, and we have an opportunity to do with new land areas, like the ones around the Dangote refinery. Otherwise, it's a ticking time bomb. Yeah.
Okay, thank you. I was just smiling because I don't know whether we need whistleblowers for apparent, deviations from the law, where the government agencies that are supposed to be, ensuring compliance are, they can visibly see that these things are being violated. I agree. Okay, I think this is, oh, Aya wants to say something, but let's take the second question quickly.
Thank you. My name is MQ, Group CEO.
Sorry, we didn't hear your name, sir.
MQ, Dr. MQ. First question is, why is there no cohesion real estate, especially with developers? She's raised a number of issues about collaboration and integration. That's a challenge that you guys need to deal with. There are a lot of opportunities, there are a lot of things that can be done better, not the individual developers. We need to drive that. I think actually one major takeaway from this. The second is, we do not blame government for everything. We cannot pass everything to government. We're commercial entities. We have absolute responsibility for the people that are subscribing to our property, that are investors in our business, to ensure that whatever we're doing is right, not just because we're waiting for somebody to tell us it's wrong. So this is very important for the developers. A lot of things are going on in this market, really by all of us in this market. We're waiting for government to come and tell us it's wrong. For me, that's something to worry about. Third is that infrastructure, which is a major component of the discussion. There are two components or two conversations around it. There are social infrastructure, which is government's responsibility, and the economic. But every time we have conversational infrastructure, everything has to be government. There's no way government can buy for doing everything. We need to also, as a matter of, as a group, what are those things that we expect government to pay attention to? What are those things that we, as investors in this space? Thank you.
Thank you, sir. Aya, you were going to say something before, so I'll just let you do that in a minute.
I mean, so good seeing you, sir. Welcome. he has raised a very strong point, and I was just going to say that in fact I was, chatting Rolake while you were about to answer or make your comments. Now, if you had told me 5 years ago that the Lagos State government would be bold enough to go into Lekki Phase 1 and demolish buildings, I would have maybe doubted you a bit. But we've seen that happen rather frequently, and for all the activities of the government, they do get quite a number of things right. Now, as cities expand and efficiencies are introduced by individual parties, you find that the government is more it is more in their interest to improve their efficiency. But what will happen around the subject area, which Madam was kind enough to ask, the Dangote refinery area, is that generally a government comes in and wants to take ESG serious, whether as a political point, whether because the health repercussions of living around those areas are now very obvious. Some government agency or initiative comes alive and those issues get resolved. But I think I would like to hang this on the points that that developers have, and in fact, even we as investment advisors, which is we do owe a duty of care to those who we consult for, those who we build for, and some blame the nature of the economic environment and say, let's just build and let's just sell. But we're seeing that change gradually. And I mean, as someone casually said to me, quite a number of people buying land around that mentioned area are really just buying court cases that they would have to settle maybe in another 10, 15 years. So, Tosin, you owe me a trip. So, I mean, once they pay you your fees, yeah. So you do have a point. There are things that we can all do, and yes, I couldn't agree more.
So I'm being prompted that we need to wrap up the session right now. Let me start by saying thank you to my panelists. Thank you very much, Ayo Ibaru, the CEO, North Court Real Estate. Thank you very much to the CCO of Mixter Africa, Rolake Akinkuwe-Filani. And thank you very much, Evelyn, for your kind contribution. Thank you to the audience, and we wish that you enjoy the rest of the sessions today. Thank you. Something went wrong.
Thank you very much for that wonderful session. And we'll jump right into the second one, which is a presentation by Ackland Properties. May I call on the representative of Ackland Properties to make their presentation?
Thank you very much. Let me start by saying thank you to Business Day for putting together an event like this. Has brought great minds together in the industry. We are happy to be the lead partner of this event as a group. Please, you put up the slide. My presentation is going to be very brief. I'll be talking about residential community accounts project in Eco-Atlantic City. Heard some of the beautiful presentation this morning. I know you spoke a lot about residential community, and Ackland as a group, we are major players in this field. So we're talking about dream residential communities, looking at some of our projects at Eco-Atlantic where we're a major player. Thank you very much. Okay, so just to give a brief background, a lot has happened despite the pandemic. More and more people tend to work from home these days, and statistics have been just put up in the last presentation to emphasize that demand for residential properties continues to grow. Being a major player in that field, we tend to look at what is the need for building better residential communities. What would the average person be looking out for? Or what is driving the demand? And some of these reasons I'm going to highlight very shortly. We've seen that noticeable demand in 1-bedroom, 2-bedroom, and 3-bedroom apartments in strategic locations continues to grow in the city. I'll be narrowing this down to Lagos State, where we have a lot of projects in prime locations, and we'll explore why this is so. What's the component of a dream residential community? The next slide, please. Component of a dream residential community. Okay, so what are we, components of a dream residential community? That's the next slide. As much as the idea of a dream residential community is unique to each individual or family, there are major components that must be present in any premium residence, which means that individuals tend to narrow down what they believe is an ideal home. It must, by and large, it must be a place where major recreational, corporate, and day-to-day needs are easily met. I mean, a good example is what a lot of people thought was impossible some years back for people to work from home is now the order of the day. People want to stay at home, they want to do business from home, they want to also be able to recreate. And they're also looking for top-notch infrastructure and amenities. Simply put, it's a dream residential community will be a place where an individual family can comfortably live, work, and play to their satisfaction. The next slide. So I'll be looking at one of the major areas, new towns that have already been mentioned, where we are big players, Atlantic City. This is a city that is renowned as Nigeria's international financial center. It's an innovative coastal city adjoining Victoria Island, Lagos. And how did the Atlantic City project come about? It was meant to address the problem of erosion that that Lagos City's coastline was facing. And by and large, that has been dealt with. People that have been to the city, there's a great wall which shows up the coastline and ensures that this problem is dealt with. But this has also brought up new opportunities for developers. And those are some of the things we're also going to be looking at. What are the opportunities in a new city like Eco-Atlantic City? Please, the next slide. Okay, so what makes Eco-Atlantic City different? There's grand infrastructure that meets world-class and large-scale financial, residential, and commercial developments. There are a lot of things that have been highlighted here. Security has already been discussed. That part of the things investors and buyers will look out for is an environment that has a high level of security. We looked at potable water, there's clean air, clean water, there's an advanced infrastructure, the road network is good. It's also important to mention that recent happenings has also brought a lot of traction to Eco-Atlantic City. I believe we are aware of the recent groundbreaking of the largest US Consulate General just last month, which will be completed in 2027. That in itself has already brought a lot of beam light on Eco-Atlantic City. The next slide, please. So we talked about what some of the things that make it different. I've talked about potable water and the sustainable environment, tree-lined and well-paved road networks. Let's talk about Ackland. Ackland is a major player in Eco-Atlantic City. We've been developers since 2013, and most of our developments are in prime locations in Lagos, Island, Ikoyi, Victoria Island. But there was a driving force into Eco-Atlantic. Part of our dream was to be the first purely indigenous company owned by a Nigerian to build towers in Eco-Atlantic City. I'm happy to mention that our flagship project, standing tall at about 20, is a 22-level building. We're already on the 20th floor. I've been able to show other developers what is doable and what is possible to come into the city. So I'll just run through some of our projects in line with what the Eco-Atlantic City has afforded us as a developer. What are the things that we've been able to do as a company? Ackland's focused and disciplined, determined leadership also helped us to have 3 ongoing projects. I think that should be the next slide, please. The next slide. Okay, fantastic. So how have we been able to position ourselves in the last 2-3 years as a company? We have a focused, disciplined, and determined leadership that helps us to set a direction for the company. We have 3 ongoing projects in Eco-Atlantic City, brazen, bold. We have a world-class team that has been able to deliver on each project, and it's still working on this project. We have been able to achieve high-quality infrastructure buildings by unique processes we deploy in our construction. If you come to an Ackland building, it's not the usual building that you're used to. The quality of the grade of the blocks that we use, up to the quality of workmanship that we deploy, it's completely different, and it's in line with international best practices. And I should also mention this, that over the years, all the people that have pitched tent with us, they've enjoyed huge returns on investment. And that's something that also attracts investors to our development. Next slide, please. So that's our flagship project at Eco-Atlantic City, here at 8 House. We're currently on the 20th level. We've started MEP. Finishing work is ongoing. And I would say that the property is 90% sold. It's in the oceanfront district of the city, which affords those that are buying to be able to have a good view of the ocean. It was also mentioned that the Atlantic City has about 10 districts, which affords different clientele to be able to buy into the space. The next slide, please. Okay. The next slide, Phoenix Tower. That's our second project that is ongoing. It's got a lot of success as a result of the strategic marketing that we did with groups. It's a 27-level high-rise building. And then when completed in 2024, 2025, it's going to be standing tall as one of the projects that Ackland can refer to as things that the can-do spirit the Nigerian has and deliver. Please, the next slide, please. As a result of the success that we enjoyed from Phoenix Tower, we started this other project, which is Phoenix Rising. It's going to be on 29 floors. And it's designed with the largest 3-bedroom apartments on offer at the Atlantic City. What we tell people and what we tell our prospective investors is to come around and take a look at some of the buildings we have, come to site, inspect our properties, and also to have a feel of a different way of building and doing business. I must also say that as a group, we have not just only a property development company, we have a construction arm, and we also have a facility management company that allows us to effectively manage the post-construction period of all our projects. So I'll round up this quickly. Building dream residential communities and sustainability. Like I've mentioned, we are in for the long-term game. So having that at the back of our minds, we're not just building, we're thinking about functionality, we're thinking about sustainability. And then in line with the theme of this conference, the only way we can ensure that people enjoy the experience of a dream residential community is having sustainability and functionality in place. Thank you very much for the time. That's our presentation from our class for today. You can check us out on our website, www.acklandgroup.com. Thank you.
Thank you very much. Thank you. So straight on to panel 2, which will be discussing developer-sponsored, promoted, buyer-friendly pathways to property ownership, gimmick or reality. To moderate this session, I'll call on Nancy Ogboe, who is founder, Street 8 Africa Foundation. Nancy Ogboe will be the moderator for this session. Nancy, please come forward. Nancy Ogboe. I think there's been a slight change to that. We might be having ourselves another moderator.
to the second panel session. It's my pleasure and privilege to invite you a number of reputable developers in the industry. For the first section, I'm sure we all know the word. Can we just give a round of applause for all of the speakers and the panelists? Okay. So the very first person of this panel is no other person but M. Kolawole India. How is this last name? MNI, the country director of REMAX and also the founder of Media Factory Learning and Co. Can we please clap him? Thank you. He's a global real estate professional, both local and Nigerian here. You're welcome, sir. He's a global real estate professional, both locally in Nigeria and internationally that lives in the USA, the UK, and diverse parts of Europe, Asia, UAE, and Oceania. He has also been doubly privileged to be country director of REMAX in Nigeria. He has over 41 years experience in Nigeria's real estate industry training as an estate surveyor and valuer, and running pioneer real estate companies like Media Factory and Co. He's now the master franchise of REMAX Nigeria. Since inception, the number of closed transactions and sales in REMAX organization worldwide has never fallen below $170 billion annually. Which is great. Thank you very much. The second person no other person but Group Executive Director of Revolution Plus. This is no other person but Mrs. Solulokwe Onolanre. Can we please clap for her? Mrs. Solulokwe Onolanre. She's a dynamic Nigerian businesswoman and philanthropist. She's Group Executive Director of Revolution Plus. She oversees the entire operation of company offices in Nigeria. You're welcome, ma'am. As well as international offices in Dallas, Texas. You're welcome, ma'am. Ms. Ohanaiga possesses over 80 years work experience in real estate and facility management, which has earned her several awards such as the most enterprising woman in real estate among others. Please can we give a round of applause here to Ms. Solulokwe.
housing solutions to over 2,000 customers in Nigeria and beyond. Please, let's give a rounding applause for Mr. Dotun. Thank you very much. I also have the pleasure to call today Mr. Obinna Onunkwo. Pardon my pronunciation. Mr. Obinna Onunkwo. Mr. Obinna Onunkwo is the CEO and founder. Is he here, please? Mr. Obinna Onunkwo. Okay. I'll be moving to the very next person on my list. I have the privilege of also calling Mr. Frederick Okpaje. Mr. Frederick Okpaje, can we please clap for him, please? He's the MD CEO of P1 Haven. The MD CEO of P1 Haven. I don't know if there's a representative from Popo, please. Okay. You're very welcome, sir. Mr. Frederick Okpaje is the Managing Director, CEO of P1 Haven. You're welcome, sir. He's a property consultant involved in buying and selling of landed housing properties in Lagos, Abuja, and other parts of Nigeria. He is a man that needs not too much of an introduction because his works speak for him. Let's clap for all of the panelists that we have here today. Thank you so much, sirs. Thank you, Ma, for joining us today. The topic is simply developer-sponsored, promoted, buyer-friendly pathways to property ownership. Is it a gimmick or is it a reality? Let me take that again. Developer-sponsored, buyer-friendly pathways to property ownership. Gimmick or reality? So I'm going to just ask, to break the ice, what do we really mean? I think I'm going to give everyone the floor to give their opinion on this. For a layman that is here, what does the term developer-sponsored, buyer-friendly initiatives mean? I would like to start with Mrs. Ononoja, please.
Thank you very much for having me. For me, when we say developers, sponsored way of, so it simply means what are the ways where people can easily access real estate? What methods, what techniques does developers, the pathway, the friendly ways, the subtle way, the way we make it easy for people to be able to access a property. And of course, like Revolution Plus is one company that is tailored around affordable housing. So if we say affordable housing, it means that we are more into retail. We are more into coming out with initiatives, with ways and friendly paths, like it may be instrumental payment plan, you understand, several different ways to make housing affordable to the general public. So let me just stop there for now. Thank you.
All right, thank you very much, ma'am. Sir, please, sir, what's your little take for the laymen that are here, sir?
Thank you very much, moderator, and thank you for having me. First and foremost, there is no easy way and there's no friendly way to property ownership. Forget all the gimmicks. Truth be told, property, real estate is expensive relative to our income. So if anybody tells you that there's a friendly way, like my darling sister here, or an easy way, it's not entirely true. Let's call a spade a spade. However, having said that, there are ways you can navigate to get to your destination. There are ways you can navigate, and as we go on, we'll talk about all the ways we can go through it. Thank you.
Thank you very much, sir. Can I please, is there a mic? Okay, I'll give you my mic. I would like your take also on it. Briefly, in about 30 seconds, what's your take, please?
So basically, when you talk about real estate, there are different aspects. You have the commercial, the residential, the head sheds and meds. But when we focus more on residential real estate, what we call, in code, gimmicks or pathway will be things or ideas and drivers that has been put in place to aid an ordinary person to be able to buy. Like he rightly said that there's no easy way. But the gimmicks in code are things that has been put in place to make it easy, just basically creating a soft landing for the would-be buyer.
All right, good afternoon. My understanding is complementing what has been said already. There is no easy way, actually, except you are disciplined enough. Whatever method that is taught to you will not be applicable. So it is when you are disciplined, if the way is actually revealed to you, then you follow it in a manner that you can, it will be able to afford you. If not, looking at it from the point of purchase, depending on your income, it will be difficult, especially with our economy. But opening your mind to know, that is having the understanding, the knowledge, and how to put something aside to be able to get along, that will help. So I believe the knowledge is the way to go. Thank you.
Thank you very much, sir. Talking about knowledge, I think that's why we are all here today, so that we can build on our knowledge to be able to make wise decisions when it comes to investing in real estate. So thank you so much, panelists, for all of your contributions. Now we get to the meat of the matter. I would like to start with Mr. Sir. With your world of experience in the industry, I read about 40 years, over 40 years experience. What do you think, sir, are the common challenges when it comes to developer-sponsored models? And then what are the best ways to actually mitigate this, sir?
Thank you very much. Basically, I've practiced in the US, in London, and in Nigeria. And there are 3 different markets entirely. In Nigeria, the biggest challenge we have starts from the get-go, which is the land. Land has become a big problem, especially in high-demand areas. For example, I heard one of the speakers say that you're going to buy litigation. In Lagos, buying litigation is about the easiest thing. You buy it easily. And my sister here will know how much of battles they've had to go through. Now, having said that, the way I see it in this country, or let me be more specific, in Lagos, would be a shell development. Truth be told, we do not have a mortgage industry. Truth be told, interest rate is simply out of this world. Truth be told, tenure for repayment of facilities is virtually impossible. Truth be told, bulk of property purchases in Nigeria and particularly in Lagos come from inexplicable sources of income. I do not want to use illegal, so I'd rather use inexplicable. Because if a man who earns a salary of, say, 4 million naira per annum, or even 10 million per annum, he cannot afford a property of 45 million. Because interest rate alone is minimum 20-25%, which would already wipe out his salary. So he really can't afford it. But somehow they sell. But the pathway to it is really getting shell construction. In other words, I don't have to have the ideal house from day one. You can give me a shell, I'll pay you, and when I can afford it, I plaster one room. When I can afford it, I put windows and doors. When I can afford it, until I build my house, which will take time. That, to me, in a nutshell, is the way around it. Thank you.
Thank you very much, sir. Mrs. Onalaja, I like your take on this, please. With your own experience, can you just name one particular challenge that stands out for you and how that can also be mitigated?
Okay, actually, before I came, I was, as Uncle was talking, Mr. Fatimlane, I was actually, thinking about 3 things. I have several, because of course, we play more in the retail sector and we do more of landed properties, even though we do houses. We've recently started doing a lot of, housing projects. One major challenge, that we are faced is, one, a lot of government policies. Before we even go into, I don't want to mention what he has mentioned about financing. I want to say what he hasn't mentioned. Now, a lot of government policies, what do I mean by that? I heard someone in the audience, the last session was talking about why would developers, and somebody said, oh, who will think government will come after Lekki Phase 1, something like that. So recently, there may be some promulgations from government that would affect a lot regarding industry, which we've seen. For instance, earlier on, I was talking about when you said gimmick or reality, when we're talking about how do we do friendly pathways for people to gain properties. Initially, we used to do something like acquisition in process, where we're able to sell landed properties to people for as low as 1 million in Lagos. And then just all of a sudden, in 2020 or early 2021, the governor says, oh, we're not going to be giving acquisition any longer in Lagos. You know, every land now will be purchased directly from government as government allocated COO. So I'm citing a scenario. So what happens? People readily, if we know realistically, a lot of the population of people falls between the medium and low income end. So when we advertise landed properties for, say, 1 million acquisition in process, you find out that you can get 1,000 people in a day who can afford 1 million. But when you put up land with CFO, maybe 40 million in Aja, maybe the entire estate, number of people that will subscribe will probably be 50, vis-a-vis the 1 million. So what does this tell us? It tells us that a lot of people actually want to own a home. Everybody needs shelter. But the affordability is not there for the average Nigerian. And then when government comes up to say, oh, we're not going to do this any longer in Lagos, you have to buy from us, so every property has to be titled. So that market closes. So we're not able to sell that. It's a big challenge. Now, we're faced with, you just have to sell, titled properties, which means that it's only for those who can afford it. So what it means ab initio is, we want to preach affordable housing. We want, to be able to make someone who never thought they could even own a piece of land. At least starting to own a home starts with having the land. If you have the land, you can build at your pace and become a house owner eventually at your own pace. But it's a situation where a law is pronounced to say, okay, stop on acquisition in process for now. It means we can't go ahead. That's one. Two, you can't give your prospects or customers a definite time to say, this is when you will get the CFO. This is when, we can't give time specifics. And for us as a company, we have a lot of people in diaspora that buys from us. They operate in economies that are stable, environments that are relatively planned. So when they want to invest back home, because a lot of them still feels they believe so much in Nigeria. So when they come home like that and they are not able to understand why you will tell them you can't give a time specific to say this is when the title will be ready. So some of this have become a major challenge for some of us who practice real estate, that we've been working with government, even though government has told us a lot they've been doing to try to digitalize the CFO process. They've showed us a lot of things, but we hope everything comes into vision early so that this will help us. I still have other two challenges, but let me just stop here for now so that I can allow other speakers say some of this. Thank you.
All right, thank you so much, Ma. Thank you so much, Ma. I'd also like to ask, what are those challenges that also stand out for you? Just one particular, and the solution you can also prefer.
I think I will also jump on what has been said, which I would say that it's a financing issue. The major challenge is financing. The headache of every developer is financing. The headache of the end user is financing. So at the center of everything, it is financing. Recently, I was in London, attended a program in Oxford, and had a lot of people from different places in the world. And I started telling them about some of these realities in Nigeria. The mortgage, home ownership is less than 20%. Mortgage penetration is about 5%, And the mouth was wide open, because the question they asked is that, so how do you buy the property? And I couldn't just answer, because I asked to ask myself, how do people buy the property? Given that all these structures, all these things are not in place. So it's a financing thing. I don't think it's a lack of houses to buy. I think it's just lack of finance to buy them. And affordability and ability to buy is key to home ownership. So just to provide a solution, I would say collaboration is the way forward. Even though regulation is also a problem, like she said, but I would say collaboration is the way forward. Even to solve regulation issue, collaboration, I want to say the developer will have to collaborate with government, but I would like to say government have to collaborate with the players too, because it sometimes look like we, the developers, have so much to do, but I believe the government has so much more to do, because if not for the players in the industry, the gap will be wider than it is. So collaboration in the regulation issue, when it comes to finance, collaboration is the way forward. Because one thing you notice in Nigeria is that everybody wants to be everything. You want to be the financier, you want to be the builder, you want to operate it, you want to. And if you compare with other clients in the world, you see that it is segmented. There are people who they are fund managers and they don't bother to develop. Some people develop, they don't operate it. Other people operate it. And if you share the roads that way, we segment the roads that way, I believe much more will be achieved. Thank you.
Let me chip in here.
Okay, sir.
My take on this is totally different. The basic problem with housing, and I'm talking residential housing, in a metropolitan city like Lagos, is threefold. Accessibility, security, and infrastructure. Get these three right, and I'll give you an example. Look at the Lagos-Ibadan Expressway. A friend of mine approached me and said, you know the DG of BP? This was some years back, not this current government. Can they please give us a concession to do a bullet train from Ibadan to Lagos, 40 minutes. In between the highways. I thought it was the most brilliant idea anybody could come up with. One stop in Shagamu and the next stop in Ikeja, 40 minutes. What does that mean? It means, for example, if I was a low-level income earner, why do I want to live in Lagos? I can simply live in Ibadan, where, you know, the Yoruba proverb that Yalo de Ibadan, Omo Egbe ni Leko. The boys' quarters in Lagos is more expensive than the detached house in Ibadan. Apologies to my Ibadan friends here. But that's the truth. We live in abject squalor. Look at the roads leading to this place. It's absolutely disgraceful. You need to have a 4x4 to live in this kind of location. Because if you take your car through this road every day, after one rainy season, you'll be looking for money to buy another one. The second one is security. Why are we all clustered together? It's because there's insecurity everywhere. For example, and let's take the Peruvian example. When Peru was going to solve its housing problem, and it was a very major one, far worse than Lagos, what they did was to open up the hinterland, secure everywhere, and the problem in 8 years, I think, disappeared. Look at the congestion on the Lekki-Ekpe Expressway. And somebody is putting a toll gate to further increase the problem. Whereas solving the problem is so easy. Ikorodu is there. Put a bridge between Ikorodu and Lekki and VGC. Put another bridge between Oronshoki and Lekki, and you have decongested that route. The basic problem we have is we don't think outside the box. All government thinks of is come and buy land, and they collect money. This is, in the civilized world, infrastructure precedes development. In our own world, development precedes infrastructure. These are part of the problems. The third one, right, is, no, I've mentioned the infrastructure, security, and what? And accessibility. Thank you very much.
Thank you so much, sir. Infrastructure, accessibility, and security. Very, very important point. I'd like your take to Mr. Okpaje, please.
Thank Thank you very much. All have said well. Mine is just to contribute. If you look at finance, I think the finance house are not helping matters. So I go straight to the point. Over there, overseas, for those of us who live there and have one or two things going on for us, you can actually easily approach the bank. Once your credit history is okay, you can get a loan. But here, you have to sell your teeth and probably sell your mom to be able to access a loan. I was discussing with my bank, one of my bank's MDs, and yesterday actually, and we're talking about money. So after we come to a point, I said, well, sir, do you realize that the banking system in Nigeria is ajo, only collecting? They don't give out. And you use the money that we give to you to buy FS and increase our burden. If this is addressed, whereby a policy is put in place that there's a fund meant for developers to access easily, I think that will also boost the deficit in the housing sector. Then our dear dad, friend, spoke about security and the accessibility. Accessibility is a major issue. Pointing out the Lekki access, I believe those of us who live in that access, we are living in hell. I was leaving my office. Between my office and here could not be more than 15 minutes. But I ended up doing an hour plus. I mean, that is on a good day. If it was on a normal day, you could do 2 to 3 hours. Now you think about the man-hour, the wear and tear on the car, the time, and all the rest of it. Now, people want to live in places where they can access their jobs or businesses. As a result, they cluster themselves in a certain location. This will drive properties to the roof, definitely, because the demand is there. And so if this is addressed, I believe some of these things, like the road they are doing, can you imagine? You have a contractor who is working, looking at the suffering of the people on a weekend that is supposed to be light. That is when the contractor go on a break. He doesn't work. Holidays, they don't work. I mean, I just wonder that, is it really in a good environment that we are living in, that the government doesn't care about the people, the suffering of the people? You buy a brand new Jeep. Just as I was coming in, I was looking at, and I said to myself, I said, look at these infrastructures here. And the roads is nothing to write home about. The rains are coming. Victoria Island will have some heat of water. So I think the government has a lot to do in this area, and the banking institution, in order to open up the gap that we're having at the moment. Then the policies of government, I mean, sometimes I actually wonder, do we have people who went to school? And these guys, they travel abroad, they have their investments abroad, they assess things very easily, and the policies they know. So why can't we bring them home and make it work? It's really, really, I don't know if it's a court, and this is what they have agreed, that this is what we have to do to inflict punishment on the citizens. So, for me, I think there's a solution, but the people who are leading has to make good policies. Thank you.
Thank you very, very much, sir. The next question I'm going to ask is with regards to, everyone knows this, with regards to the inflation rate that we currently have in Nigeria now. There's one word I've been hearing since the beginning of this conference, it's affordable housing. So with the inflation rate, how affordable are these houses really? And Are you encouraged to even continue to play in this sector with the growing inflation rate?
Thank you very much. You know, I know a lot of people who are friends and they call my husband Mr. Affordable and they will say, you are this your affordable housing. God will help you with this your vision. So for us, you know, because we started with the aim and the vision, you know, to help those who never thought they could own a home, own one. So our MD will say, my joy, and that's why we don't do properties in Ikoyi, we don't do high-end. He will say, my joy is to see that Okada rider buy a land and starts building. That I'm more fulfilled that way. So for every one of us cannot play, the deficit is large. That's the truth. Government cannot even meet it. And it keeps getting larger by the day because of the population of people trooping in, especially into Lagos. So to answer your question, we looked at it, we said, now this vision, so the first time he said, oh, with all of this that is happening with this inflation and all, it looks as if they don't want us to drive this our vision. So we looked inward and we felt, what can we do in the midst of all? Yes, we'll still play in that sector. I'll answer your question. Because the truth of the matter is, we all know the power of retail. Let's forget it or not. Retail has a lot of power. If you look at people who do retail business, you will be shocked. And like I cited an example, if we put a land of 1 million, I have 100 people that will buy it in a day. You that are selling Ikoyi for 100 million naira, you may not get one buyer, you may get probably one buyer in 1 month. I have cleaned out, I've sold 1 million times 1,000. So I know the power of retail because we've played, even though the story of retail is a story for another day. It comes with a lot of headaches and problems, but it's a story for another day. I'm just talking about answering your question. So we've realized that there's still power in retail. And what can we do if we still need to play in this sector? So we looked at it, we said, okay, just like Mr. Fatimleng said, Mr. Diasa Fatimleng. So we said, okay, let's go to outside Lagos. We can play, we can still do affordable housing in Mowe. For instance, we have a 2-bedroom bungalow we sell in Mowe for 15 million. In fact, it just became 15 million. People are living there, full completed. I'm not talking of carcass. That can never happen in Lagos. It can happen in Lekki, but it happened in Abeokuta, in Ibadan. The same thing. We have bungalows for as low as 12, 15 million in Ibadan, which we can't do in Lagos. You get what I mean? So we realized that we could still do this affordable housing outside Lagos. So in Lagos, we said, okay, what can we do if we're going to do affordable housing? So we decided to partner with, some mortgage banks who could give people, terms up to 15 years to buy a house. So once you come to us and you say you want to buy a home, we just take it to our partners because we don't have the means because of the interest rates in the bank. We can't, and the mortgage system is not working. So we can't stretch payments. We can only spread payment maybe for like 1 year to say, okay, let's help people 18 months. But we can introduce you to our partners who can give you as much as 15 years. So that's the best. Of course, it will still come with interest rate. So somehow, we still try to work around it. But of course, inflation is catching up on, in fact, the rate is much. But like I said, Revolution Plus will still play in the retail because that's our vision. And that's the decision we have tried to make as a brand. So, of course, we'll still stay in the retail and try to work things out as much as we can. Thank you.
Thank you so much, Ma. I would like Mr. Okpajo's take on this. What's your take, sir, on this affordability of houses?
Thank you very much. Affordability. Looking at the inflation rates, it compounded the whole issue. But we have places like Ekpe, just like Revolution Plus said. At P1 Heaven, we're looking at extending beyond the urban areas to open up so many areas that can be affordable, because actually what affects the buildings is the cost of the land. And when the cost of the land is high, when you are constructing on it, what type of building you are putting there will be determined. And so at P1 Heaven, our motto is actually to make ownership dream a reality for as many as possible. And in order to achieve this, we do not only concentrate on the urban area, we're also opening up the rural areas where we can get affordable lands, where the policies are a little bit lighter. And by this, we have extended even beyond Lagos, beyond Ogun State. And we are spread across all the eastern states of the country, the south-south. Our mission actually is to cover the entire country. And those who live in the rural areas are having a breather at the moment. Instead of living in thatch houses, they are now living in modern houses. And we could actually do this by letting go of only the urban area to encouraging people. But still, we still have a challenge, because the reason why Victoria Island and Ikoyi is actually densely populated and you have traffic and all the rest of it is because all the commercial activities happen here. And so people come from distance. So going back to what Dia said, you're now looking at accessibility again. And that is something that we can actually recommend to the government to look into speedily, so that people who live in Ibadan within 40 minutes can access their jobs in Lagos and go back to their homes and rest with their families. So I believe it is possible to bridge the gap. Thank you.
Yeah. The basic problem we have in our society is we don't tell ourselves the truth. There is no housing that is affordable. And until we tell ourselves the truth, it's a political language. They used to call it low-cost housing. Then the politicians felt that they would be insulting the poor. Then they changed the language to affordable. There is not one single house in Lagos that is affordable. And until we know that, until we accept that, we're not going to solve the problem. The second problem I see is a structural problem. All developers are moving in the same direction. When you go to Ikoyi, it is high-rise. When you go to Revolution Plus Estate, it is low-rise. And the question you're going to ask yourself is this: what exactly should you be doing between Mobile House and Ekpe? How many low-cost houses exist there? Or affordable houses exist there? Not one. All you are seeing is terrace houses, townhouses, duplexes, detached houses, luxury flats. Now, the big men who will buy up all those properties, where will their staff live? I don't know whether you know the story of Abraham Adesoya. Abraham Adesoya was so oversubscribed that, and I am a living witness, as I speak, I paid for 5 of the units. I have not gotten one, nor have I gotten my money back. That shows the level of demand at that time. Now, what's going on here? Unless and until we break down our problems and tell ourselves the truth, which is what I've said: infrastructure, security, and accessibility, we are not going to solve our housing problem. That's where the gimmick is: affordable housing. That's the gimmick of the industry. Now, we also have to be very, what's the word now? We've got to be very innovative in our approach to solving problems, to housing problems. For instance, do we do crowdfunding? Do we do timeshare? All of those things are ways of owning. Let me give you an example. A man who lives on a rig, oil worker, is a bachelor, Why does he need to keep a house when he's there only 2 weeks max in a month? He can partner with another of his colleagues who is having an alternate leasing, and they could jointly own. That option we have not pursued. Have we pursued the option of selling through lottery? I'll explain, and I'm saying this is not unique to me. My brother, my immediate elder brother, lives in the street. There was a property they were offering for sale. All you do is you pay $1,000. The property was worth $260,000. Then they will draw lots. Whoever gets it, once they've reached the sale price, they draw a lot. Whoever gets it has paid only $1,000. And when I first heard it, I went to look at the house. And there was nothing wrong with it. It was furnished. It was okay. And I said, I can spend 1,000 naira, enjoy myself in the US. I can gamble 1,000. You know where I come from? I'm in Jebu. I can gamble 1,000 just in case. I didn't win, but somebody did. Revolution Plus. You pay me consultancy fee for all these ideas I'm giving you.
But sir, but I wanted to just quickly chip this in that if we've not seen affordable housing work, we won't preach it. We've made a lot of people, yes, sometimes tears comes out of our eyes. We've made a lot of people homeowners in this country through that scheme. I remember when we started in Mowe, a lot of our customers were these women who sell in Maltov markets. They will give us fruits that time. And then these Ijora market women, they bought at that time, and they finished building their houses. They were taking block by block. They bought the land 400, and they were able to build. So we believe strongly that affordable housing is still possible. And what do we mean by that? It's just trying to see, okay, because if we say it's not possible, sir, what we're trying to say is a lot of people will give up and say, okay, so home ownership is only for the rich. So I can never own a home. And a lot of them will not even strive. They will not even strive to start from somewhere. They'll just give it up that it's only for the rich. Meanwhile, shelter, if it's well planned, everybody can actually make it little by little. And we mustn't all live in Lagos. I can take a land in Ekpe and start building. I can take a place in Ibadan. If there are roads, you know, and at least if they call landlord, I'm still going to come out. Yeah. Whether my house is in Ekpe or Ikorodu, I'm still a landlord anyways. Exactly. So I just thought to chip that in. Thank you.
Thank you very, very much, sir. Because of our time, we have so many other questions. But because of our time, I'll just let Mr. Loyede take briefly.
You see, personally, I can make my peace with when you talk about affordability in a low-cost housing project. Because the concept of low-cost housing project is a kind of subsidized home ownership scheme. So when you talk about affordable home housing, it means the developer wants to subsidize the cost of owning those apartments. But the one that I cannot wrap my head around, how these two words work together, is affordable luxury. I don't understand. Where is luxury affordable? And you see houses coming down in Ikoyi, and I can tell you that it is because of those words, where people want to buy luxury product at a cheap price. And developer wants to make it available to you also at a cheap price. And at the end of the day, you complain. So the question is, the gimmicks, is it from the developer or the buyers, really? Who is gimmicking who? Yeah. The person that bought it or the person that sold it? Luxury cannot be affordable, and we need to tell ourselves that truth. You're buying a house in Ikoyi, you can do your research yourself. It's coming at a certain price point, and you buy it, and when you go in, you start complaining. The doorknob is bad. It's going to be bad because you bought affordable luxury. So we need to tell ourselves the truth that home ownership, if you benchmark cost of home ownership in Nigeria and other places in the world, you realize that it doesn't match, really. There's a gap. There's a wide gap. So the question is that, where is the money coming from? Then it speaks to standardization. Are we doing standard stuff in this country? Are the things... you know, in Nigeria, you can build a house and sell it, and there's no regulation that comes and inspect if the house is okay for somebody to buy. All those things are missing. And I think those are the things that has been taken away to make those houses affordable. And that's why they are never good enough.
Thank you very much, sir. There are many other things we'll have a lot to discuss, but I'll just mention it. For example, regulators. You know, we also hear about the collapse of buildings. I would not want to talk too much about that. We hear about how some approvals, by developers are doctored or something like that. Don't let me go in too much into it. But then, if there's anything we've learned in this session, I think for me is that the Nigeria needs to actually explore other ways of funding and to make properties, real estate, actually affordable, accessible to the common man, because we know that housing is actually a major need. It's not a want, it's a need. Okay, on this note, I would like to thank my panelists. I wish we had more time to spend with you, but thank you so much, Saz. Thank you so much, Ma, for this session. Can we just clap for them, please, as we close this session? Thank you so much. Are we able to take questions? 2 questions. Okay, thank you. Is there any question? Does anyone have a question? Okay, 1 question. Any other person? And okay, sir, please. Question, please. We'll take that briefly.
All right, thank you so much.
Please let us know who you want to direct it to. Please introduce yourself also. Thank you.
All right, my name is Edmond Anozie. I actually work with Optiva Capital Partners. My question actually can go for anyone can answer the question. It's about bridging the gap. You understand? So what we're talking about closing the gap. We are talking about the people. We're talking about the average Nigerians and the rich people. So we're talking about real estate investments. So what are the measures put in place by our developers? Or is there anybody that is in collaboration with the government? Because we are talking about collaborating with the government to make things easy and other. Are there already, unit or body that joins developers with the government to see about these things or to solve these problems? Thank you so much.
Okay, I would like to answer you. So we have a body called Real Estate Developers Association of Nigeria, which is REDAN. So that body actually works in collaboration with the government. A lot of times when there are going to be policies and changes and things, they always have meetings. In fact, from time to time, we have meetings in Alausa, back to back, with different agencies. In fact, last week, we were still with SCUMU, for Money Laundering Act and all that. So there's a body actually that is responsible for that. But having every developer, be a part of that association is what, it's another thing, because we don't have as much number of people we should have in that association yet. But we believe that at least we've started and it's moving on fine. So there's a body called REDAN that works with the government. And recently, there was a meeting that was even held, and the governor, promised also to give REDAN a parcel of land, like a lot of acres that, government wants to work with developers so they could build houses for, individuals. So there's a lot of, things going on in collaboration with the government through REDAN. At least that's much that I know. I don't know if my other fellow developers have other things.
Because of time, I'd just like to ask the final question. The question is on, we hear about the collapse of buildings here and there, and it's unfortunate that these things happen, but they do happen, and they take lives of people when that happens. Sometimes it's while the building is still under construction. Sometimes people are already inhabiting those properties. When we check it, we realize that, yes, there were approvals given for all of this, but sometimes developers exceed, what they're supposed to build on those properties. So my question is, why is this happening, and how can this be curbed? How can this be curbed? Thank you.
Yeah, 2 ways here. I would say the developer and the government are both responsible for this. And going back to the developer side, I spoke about segmentation. In case where one person is the alpha and the omega, you are the owner of the project, you're the developer, you're the engineer, you operate it, you sell it. Things like these are bound to happen, meaning that there are no checks and balances. And as long as you don't have things like that, sadly, we might still have something like that. And when it comes to the government part, the regulation, the bodies, and I looked deeply into it and I realized that all these policies and all these laws are there. It's just they are not enforced. You have health and safety, you have everything, But somehow there's compromise across board, and some of these things pass. You know, the body that's supposed to protect the end user is compromised already. So the end user just walks into a trap and you pay for what you didn't bargain for. So I think government and the developer has a very deep role to play if we're going to stop this thing. And as a form of general advice to the public, I know when you're buying property, the first thing is, the first and only thing sometimes is a lawyer. But I want to say that the way it is now, you probably have to get an engineer, ask for their structural drawing, get somebody to interpret and look at it. You know, when you begin to have that kind of, and it's something services we're looking to provide, how can you advisory role for purchaser? You know, you have the lawyer already, your bank is probably going to fund it. Why don't you have a professional check, look at those things for you, and ask questions? You know, most times you don't know the right question to ask. You're just asking for, can you give me discount? Can it be affordable? There are other questions you can ask that will give you insight to whether the right thing is done or not. Thank you.
Sorry, quickly, another thing. We are talking of developers. I want to talk from the point of government. So we have a project on Orchard Road. We're building 72 units, both flats and terrace houses. And then the Lagos State government comes to that site and says, they sealed up actually all the project on Orchard Road from beginning to the end. And guess what? They brought a bill for building plan, whatever, and they brought a bill of over 400 million. And then the first question was, how much are we selling the houses? How much is the land? How much is the project? That we will pay government for over 400 million. By the time we pay you 400 million, why won't developers start cutting corners? Now, the customers will be there saying, my project is being delayed, you're not doing my project. Government is sealing. I know a developer, I bought a property from Nikoi. I couldn't talk to the developer because I'm also a developer. His project was sealed for 2 years in that same Nikoi because of building permits, payments, and approval. So the government also needs to look inward. You don't want people to cut corners. We want them to deliver. Why don't you make it also, workable? Why don't you make it real? Why do you want to ask us to pay 400 million for a project of how much? How much did we buy the land? How much are we selling the houses? So if you don't want us to cut corners, which we don't want to cut corners, we will not even cut corners. So the government also should look inward at the kind of outrageous, bill. The same thing on Ogombo Road. They will go there, seal the project, seal the gatehouse, and put signs, come and pay. Then you see the bill, 100 million. So government also has a role to play in it. Let them also be realistic in the demands. We build houses in Dallas. For instance, Revolution Plus, we have a branch in Dallas, Texas. So we build houses, we sell houses in US. So nobody comes there to slam us charges of 100 million when we're building the houses. So why is it in Nigeria? So government also has a role to play in all of this, not only developers. Thank you.
Thank you very, very much, Ma. To be fair, because I want this to be balanced, so I will still have 30 seconds. If I don't know if you want to also add something to it.
Just like Revolution Plus said, I think the compromise is coming because of the bills. For any developer, you want to cover your costs and make profit. And so both parties have to sit down. This is what Redan actually represents, where we interface with the government to make policies that are enduring and also flexible for the off-takers. So I think we should look more on this as we progress, especially in policy making and implementation. Time duration is a major issue. If you stop a project for 1 year, 2 years, I mean, you will see that inflation would have caught up and it has increased the cost of delivery. As a result of that, you will see that, okay, how do I recover my money? Because you can't pass that cost to any other person, and the end user is the person that will. So that is where the compromise is coming from. But the advice is that we should do things right, and I believe it is possible.
I don't know if Mr. Dia has a closing remark for us.
Truth be told again, There is no fault from the developer. All the fault is government. I submit a building plan. I want to do a project. 6 months after, I don't have an approval. Because the government officials are deliberately frustrating it so that you go and start, then they come and slam you with the kind of bill they slammed my darling sister here. That's all. Now, why would I have land and sit down for 6 months, fold my arms, and wait for approval in a nation where interest is hovering between 19 and sometimes 29% interest, where exchange rate is going at about 10% growth every quarter? It's just not practically possible. That is why almost every developer flouts the law. Before approval is out, they have started building. And I don't blame them. I don't blame developers. That's why I said, when my brother said he's developer, I said, if government would do, well, why should it take 6 months to study an architectural plan, an M&E, and a structural plan? I did building and civil engineering before I studied estate management. I can do all the calculations for the structures and give you an approval or a rejection within 72 hours. Because when the structural engineer is submitting, he's submitting his calculations and the basis, so I can follow and see whether there's a fault. Surely in 72 hours you can do that. I still can't wrap my head around why approval cannot be out in 30 days. I have never understood why. Thank you very much.
Thank you very, very. Can we please clap for our panelists? This has been a very, very impactful, insightful session. Thank you so much, sir. Thank you so much, Ma. I think on this note we can also, yes, we can leave. But we'll take a group picture first. Thank you.
Thank you very much. And on to the next activity, which is a presentation session by Purple, one of our sponsors. I'd like to call on the representative of Purple to make the presentation on fractionalization, the future of real estate investing. Representative of Purple, please. Representative of Purple, if you're in the building. All right.
Okay. Hello, everyone. Good afternoon. It's a real pleasure and privilege to be here speaking to you all and sharing some of the ideas that we're very passionate about at Purple. If you don't know Purple, we're real estate developers. Our flagship project is Purple Maryland, formerly known as Maryland Mall. You can find out more information about us at our booth. So today I'll be speaking about the future of real estate investment. So, next slide, please. Looking at the future of real estate, I thought it was important to have a look back at where real estate sort of originated from. Sorry, I'm not speaking to experts in the room, but I hope you just indulge me to just explain. So, back in the day, if you are a real estate investor, you would have probably been a friend to a king or a friend to a tribal leader who would have allocated that land to you. But that land, that was the most security. you're investing 50K in real estate. Rather than spending your whole 50K on one asset that you don't know how it's going to turn out, you can spread that 50K over different assets and spread your risk so that no matter how it turns out, you can at least make some returns and you're not stuck in one development. And the ease of use of our platform is something that we are also very proud about. We've made it seamless end-to-end, so everything you need to do on the app, from registration to payment to settlement, all the various processes, including decisions and voting rights and stuff like that, have all been factored into what we're doing. So it's an end-to-end platform that literally gives you the power of being a landlord, the ability to be a landlord right in your hands. For homeowners and developers, we also have some value propositions, which is improved liquidity, being that if you are a developer and you've just completed your product, you are able to raise some funds from our marketplace. You have direct access to a large pool of investors, rather than looking for someone to connect you to investors, to someone to buy your property. You have a ready marketplace of people who are willing to pick up bits and pieces of your assets and just move on with it. You can manage your corporate actions on our platform, meaning that it's a full digital platform, end to end. You can also participate in the buying and selling of equities on this platform. So it's a full digital platform. So the blockchain advantage, which is one of the things that sort of helps stand our application out, smart contracts and ledgers are all being used on this project to ensure that it's seamless, all the information is captured, and it's done electronically. So for instance, the problems of waiting for payments before you can ascribe a piece of land to someone, using smart contracts and ledgers, once the requirement is met, the system passes messages on to each other and you know that fine, it's been done, and then the changes can be effected. So why is fractionalization the future? We believe it's the future because it solves the problems of access on both the buyer and seller side. It levels the playing field even more. It makes wealth less of, makes your personal wealth less of an issue in terms of accessing real estate, and it also gives developers an easier path to exiting their transactions because they can spread it across different people rather than focusing on finding one buyer. So Fractions is coming soon. We will be launching this year. We'll be launching with over 30 billion naira worth of assets listed by virtue of Purple's extensive real estate operations, which is why we also talk about the offline-online play, being that we are creating something that obviously feeds this marketplace. So thank you very much. Look forward to receiving any questions and hopefully having you download our app when it comes out. Thank you very much.
Thank you very much. Okay, so let's make good on time, and I'll call for the second time today, and it's no mean feat. Our moderator, she'll be moderating to Deborah Ono-Fadeji of Trusted Advisors. She'll be moderating the third and final panel for the day, and she will introduce our panelists. Deborah, please put your hands together, back to back. Come on. Rochester.
Good afternoon again, everyone. The audience, I'd love to hear you, please. Good afternoon again, everyone, please. I hope we've been having a very insightful session here and enjoying ourselves. The next session is on the topic Borrower Beware, Finding Market-Led Solutions to Nigeria's Mortgage Inefficiency. If there's anything that we got from that last session, I'm sure that we heard the word funding and the problems that lack of it could also impact to prospective homeowners. Funding, we all know, is a major issue. It's a major issue, and in most cases, homeowners have to borrow because, like the example that was used in the last session, most of the time their income cannot justify or cannot even meet up with the cost of this affordable housing, so to speak. So this session really is to look at how borrowers can be mindful of some very important things when they resort to borrowing. It's my pleasure to invite 5 panelists today. We have, in no particular order, Mr. Taofik Olatinwo. Mr. Taofik Olatinwo, the Associate Director and Head of ICT and Business Operations, Nigerian Mortgage Refinance Company. Can we please give him a round of applause? That's Mr. Taofik Olatinwo. You're very welcome, sir. You're welcome, sir. Fine, thank you. The second person I'll be calling today is Mr. Dipo Adeoye. Mr. Dipo Adeoye. Can we please clap, please? He's the Executive Director of Abe Mortgage Bank. Thank you so much, sir, for coming. We are very happy to have you here. Thank you so much, sir. The third person I'll be calling this afternoon is Mr. Stephen Orji. He's the Director of PENEC Nigeria. Mr. Stephen Orji. Thank you very much. You're very welcome. Please, can we clap? These people have left their tight schedules to be here today. Thank you so much for coming, sir. You're welcome, sir. The next person I'll be calling is the CEO of Kasafina, Dr. Olufemi Sheyi. Dr. Olufemi Sheyi. Okay. Dr. Olufemi Sheyi. Okay. You're very welcome, sir. Thank you so much for coming today and honoring us with your presence. The last person I have, who is by no means the least, is the CEO of Estate Links Limited, Mr. Gbenga Olaniyan. Mr. Gbenga Olaniyan. Thank you so much for coming, sir. This is Mr. Gbenga Olaniyan. Thank you, sir, for coming. Thank you so much for coming. This session is really on the topic, borrower beware. I know there are many borrowers here. I won't say we should raise our hands, but borrower beware. Finding market-led solutions to Nigeria's mortgage inefficiency. Like I said before, the last session talked about the major problem, which is access to funding. So our distinguished panelists here will be helping us with things to look out for or considerations to actually have in mind when borrowing. Now, I think the first question I'm going to ask all the panelists here is actually whether they feel, because studies have shown that many people do not even know that there's access to funding via mortgage. So in their own opinion, I would like to ask SARS, in your own opinion, SARS, do you think that there's enough knowledge, there's enough awareness about access to funding via mortgage, and why, if there isn't? I'd like to start from my right, sir.
Thank you so much for having me. I think the first thing to note is that for someone who has not had a meal, the last thing he's thinking about is how to buy a home. And if you were to take a poll, go to a bus stop today, and I'm not just talking about area boys, where you have professionals who are on their way home, and you were to ask people about the National Housing Fund, I can tell you, without having done any statistics, that you're most likely to have perhaps 1 in 10 people who would be able to tell you how to access mortgages via the NHF. And this includes people whose offices are deducting from their salaries. So I don't want to go beyond the question that has been asked without knowing what the statistics are. I have no doubt that probably somewhere around 90% of folks in Nigeria have no clue with regards to the different opportunities that currently exist.
I follow suit also with the submission of the gentleman. And I beg to maybe buttress the point that it's not really a function of the, will I say, the uneducation of the people or their lack of awareness. Yeah, the body to make those information available, yeah, are they doing well enough to make those information available? The last panel, one of the submissions from the last panel mentioned that the mortgage penetration in Nigeria, I think it's about, it says less than 10%. Yeah, so if it's less than 10%, that brings us to look at how much information are the mortgage financiers pushing, or how much information are they pulling into the market to educate people about what is available. Yeah, we're not even talking about NHF you mentioned is about government, but we're talking about the private guys who are out there. How much are they pushing and how much are they pulling those information? So I think there's a dearth of knowledge globally, but in Nigeria is worse off.
Sir, please, what's your take?
Yeah, thank you very much. I believe that it's a very valid question when it comes to the awareness of people in terms of mortgages. From Nigerian Mortgage Refinance Company, we started full operations in 2015. And since then, we've been providing liquidity to the mortgage banks and even the commercial banks. And one of the things we've been trying to do as well is the advocacy to create more awareness. But we also have to look at it from the culture of our people in terms of savings, in terms of actually borrowing to buy homes. We've been so used to building one block at a time. You buy the land yourself, you mulch the blocks, then you build. Now the concept of buying a finished house is something that we're just beginning to warm up to. And this is going to take a while. We're talking about the nation, not just one family. But it's beginning to grow. We've seen the uptake. Since we started, we've been able to provide refinancing up to 30 billion naira. And I think it's a very good thing for us because when we started, interest rates were going as high as 22 to 30% for home, to be able to get mortgages for homes. But now it's getting down, we've been able to reduce it by about 5% at least. And this trend will continue if we keep up the pace. The advocacy is something that we all have to start working towards, to inform the people, to let them know that this affordability thing is something they can calculate themselves. They do not need professionals to do it. And this is what we're trying to advocate from NMRC, for people to have the knowledge and be able to, take it further. Thank you.
Okay, thank you very much. I think to focus on your question, I think there's not enough awareness because, like someone said, the penetration is about 10%. The reality is, if you ask even a professional, how do you access mortgage? Or do you even know that you can access mortgage? The answers you get are a bit not very articulate. So, and I'll give you an example. This year, Abe Mortgage Bank is 30 years. You'll be shocked that people probably don't even know. And this is the work or the core of an institution like this that have been around for 30 years. But the question is how many people are aware of how to access it? And in terms of how it should be done, I think it's across board. We are doing our bit because one of the things we're doing our bit right now is that for developers that we are funding on the construction finance side, we try to partner with them to showcase the fact that your off-takers can take mortgage from us. So that way, you're pushing joint publicity that cut across the value chain, not just you pushing that, oh, there's a property. You're also saying to them, to access this property, there's a mortgage facility that you can get to get the facility. And I think also someone mentioned the fact that organization deduct NHF from people's salary. I think it's responsible enough for the organization to explain to the staff, this deduction I'm making for you, this is the way you can actually get it back. So I think that information also should permeate through the organization because they're deducting these monies. That's the reality. So they should be able to have sessions and collaborations even with PMIs on how they can access mortgages even for their staff. So I think it's across board, not just regulators or primary mortgage banks that should push the narrative. It should be a narrative that should be pushed across the country. And with that, we will see enough penetration. Even though, like you said, I agree that what we have today is better than what we have probably 5 years ago. A lot of people are beginning to key into it. The culture is changing. But again, there is enough room for improvement.
Thank you very much, sir.
Thank you very much for that. First of all, I agree. There's like a dearth of information about mortgage. And I'm going to come from the private sector-led side of it. I think the onus is on individual player in the market to actually create product and to communicate their product. Now, if you take a census now and you say, look, how many of us are familiar with 737? You know, this I think is GT to transfer. If you're familiar with that 737, can you raise up your hand? Quite a number of people with. Now, how many of us have seen an advert of a mortgage bank in the market today? So that is, well, I'm not trying to indict the private sector. Now, so there's a challenge with that in terms of, two, product development within the mortgage industry is very poor. You don't even know whether there's a specific product targeting a specific class. Mind you, the demography that we have is changing. There are younger people who are open to financing their home, and we prove it. We started a development somewhere on the island, about 70 unit total, and then we said we're providing a developer finance kind of mortgage. We oversold, and we have a waiting list for that. So there's enough market. The question we now need to ask ourselves is, what is the information we need to give to our market? By the way, I don't think mortgage penetration is up to 10%, because when you say 10%, that means 20 million Nigerians have mortgage. If you calculate it at an average of 10 million naira, the total mortgage industry, I don't think it's up to that at the moment. I stand to be proven wrong. So I think the penetration is far lower than that. But even for the market that can afford the mortgages we have, they are not familiar with the product that is existing in the industry. And I don't think it's going to be like an industry coordinated thing. I think at this level, individuals will now have to sit down and say, how do we communicate what we have? How do we leverage technology to deliver those products? For example now, but before I just wrap up, you're seated here. You can get a consumer loan for 5 million, depending on your income, without leaving this place, without stepping out anywhere. If I want to take a mortgage that is secured by my house, that I'm going to pay 40%, you need to pray, go for night vigil, go to the mountain, get your grandfather's genotype, apologies again. It's cumbersome a lot of time. It has to be so. I should be able to get a mortgage without necessarily going for night. So that is also a gap, and that's why a lot of people are not even interested in, because of the problem that comes with accessing mortgage as a whole. So information, simplifying product differentiation, and continuous communication. The mortgage industry is large. Ideally, it should be a major driver of the capital market. If you look at other climes, it should be a significant part of the capital market. We're still, very small. So we need a bit more activity on the side of private sector players.
Okay, thank you so much, sir. Drawing from all of the contributions I've just gotten, I think we should just not assume. I think we should do a little enlightenment on what mortgage is and what the advantages of actually getting it quite early. So I would like to ask Mr. Dikwo Adeoye, please. Can you please let us know, simply speak in a layman's language, what is mortgage all about, and what are the advantages of getting it quite early?
Okay. Thank you very much. I think mortgage is just you part financing the home you want to buy. And like you mentioned, some people would have you pay about 40%. We do 30% at the moment. What it means is that if you're buying a house that is 10 million naira. All you need to pay is 30% of that. We fund you with the 70% for a period of 10 to 15 years, depending on your age. And what you then do is that 70% you are paying almost like a rental for the period of that mortgage. What that does to you and why it's important to do that is that today you might not have 10 million, that's the truth. And the 10 million today, what you can buy with it, trust me, because of where inflation is today, you might not be able to afford that property, even if you say you want to continue to save your 30% for the next 3 years. So what that affords you is that you are able to get a home today. The good news about it is that ideally, well, economics say that property is supposed to track inflation. So ideally, if you buy the property today, the expectation is that the capital gain on that property should track inflation as it's going up. So if you can lock it up today, 10 million, it means as you're paying your 70% mortgage over the next 10 years, in 10 years' time, that property is not worth 10 million anymore. It's worth way, way higher than that, rather than you waiting 10 years' time for you to be able to afford the entire 100%. So that is what mortgage helps you to do. It helps you buy what you can't fully afford in that sense today.
Thank you very much. I would like Mr. Oji's take on it, please. What's your take on what mortgage is in the layman's language, and then what are the advantages of actually getting it quite early as you start your career?
Just to buttress what the MD of Abbey mentioned, I think the advantage of starting a mortgage early is that you have more time. Yeah. So in case you fall, you could recover. Yeah. The disadvantage for our client, which I think we'll talk about more, will hit heavily on the interest rates, on the interest. But the advantage is that you have more time to recover, and instead of paying rental, so if you're living in a comfortable house, instead of paying money as rent, which is not coming back to you, yeah, your rental as it is like you're paying a mortgage is your rent plus an interest, yeah, and the house eventually belongs to you.
Thank you very much, sir. So if the advantage of starting early is that you can spread it for a longer period, right, sir? And then you can, so it eases the burden on you financially. I would like to ask Mr. Olatinwo, please. In other climes, we see that everybody says, if you want to buy a house, get a mortgage. You know, it's not a big deal, you know. But in Nigeria here, we see that it's not obtainable. So how can we actually deepen that that sense of awareness, so to speak, and how can we actually make the opportunities actually grabbable by the common men, you know, in the streets?
Yeah, thank you for the question. So at NMRC, when we looked at where we were coming from, we said the best thing is to use the value chain approach. The value chain approach means we start from the point, you know, of land titling to the point where the developers are building, to the point where off-takers would like to buy, and to the point where they would like to take the mortgage, and to now, you know, go through the advocacy to let people be aware of how much they can get from the banks, right from the time they want to buy the homes, and how much they're going to be paying back. So that brings us to the affordability aspect. So the advocacy is very, very important. And just like one of my brothers said, that we need to really go back to employers, people deducting the NHF. We need to go to the communities, to the cooperative, you know, societies that we have, to the market people, and let them be aware that they can actually borrow money based on their income, and to keep saving money more towards buying a house. Now, the previous question also, you know, brings credence to this, because if people start at the early ages, for example, when you come out of school and you get a job and you go to take a mortgage, you have more years ahead of you. And when you spread it, the amount of money you pay back every month becomes very small.
For example, if you take a loan of, say, 10 million naira now, and it's going to be for 10 years, you probably be paying back about 200,000, well, 90,000 every month. And that means you have to be earning up to 270,000 naira per month. But if you spread it over 15 years or even 20 years, then you probably need to earn just about 150 because you'll be paying back 50,000 for the same amount of money that you borrowed. Also, you would also be getting promotion because so the advocacy is to start very early to get people to be aware, to let them be able to even do the calculation for the affordability for the mortgage they would like to take, and to also explain to them all the key things they have to do, the documentation, right? Having the proper title for the property, and being able to now come together to even bring in your spouse or your wife or your husband to do a co-application and be able to provide more liquidity for yourselves or to show that you have more income so that you can borrow more. So this is really very important. Getting the awareness out there is very, very key. The employers, and as well as even the government, coming out to play, because we've been working from NMRC with the government to have what is called a modern mortgage and foreclosure law. With this, the government will go out to all their workers, the civil servants and the public servants, and explain to them the beauty of being able to, take the mortgages rather than, taking the risk of building houses that they will abandon eventually. Why not go and buy what is already there? You take the mortgage, you don't have to pay for rent. Instead of paying for rent, you'll be using it to do the payment, down payment for your mortgages. And these are the things we're trying to advocate. So the advocates, we need to do a lot more, and I believe we're going to get there. Thank you.
Thank you very much, sir. My next question is on the inflation rate, which we know has affected or is affecting every area of the economy. So my question, sir, I'm directing this question to Mr. Gbenga Olaniyan. Please, sir, what do you think borrowers should be mindful of with respect to the current inflation? Do you advise them to still borrow? And if not, why? If yes, why?
The big answer to that is a massive yes, because it's straightforward. Inflation right now, in fact, nobody knows where it is. I heard somewhere around 16, I have heard 21%. The only thing that can happen is for prices of building materials to keep going up. And I will tell you this, just as an example. And I was so happy that I met the previous panel. We started a development last year. We actually submitted documents for approval. And the entire cost of the development was to be 1.1 billion. We eventually got our approval a month ago and went back to tender. Same development, same design, same location is going to cost us 1.75 billion. So that's an increase of over 60%. Who do we pass this to? We pass it on to the buyers. But for anyone who had actually put in a stake last year, especially if it is contractual, you can bet that what you have done is you have actually gained that amount of money. So what happens in periods of inflation is that you ensure that you rush in to make a stake in the real estate market. When the opposite is the case, then you start thinking that is my property value likely to appreciate? Now, I'm a valuer. So yes, people will say cost is not necessarily the same thing as value. But nobody's going to build something for 1.7 billion, even if it's 100 homes, and sell for 1.1 billion because you love the buyers. At the end of the day, you are going to sell at the cost price, at above the cost price, as long as you're not the Red Cross or you're not the Girls Guide. You are in need to make profit. So just to round up, at times of inflation, You need to get in early, otherwise you'll be burnt.
Thank you very much, sir. So borrowers are still advised to borrow. That's Ms. Olani, your stake. I would like Mr. Shea stake, please. Do you advise that borrowers should still borrow in light of the increasing inflation?
Let me come from the finance side. But in Nigeria, where inflation is double digit, your best bet is to be in debt. And let me tell you why. If you give me 100 million today, and I'm paying you over a 10-year period, by the time I finish paying, the value of your 100 million is probably around 30 million. So I'm paying you in cheaper naira. Meanwhile, I've utilized your money to do what I need to do. So I generally joke with my colleagues and I said, this is the time I want to be in debt. Because if you borrow me 100 million last year and I do whatever I needed to do and I'm paying you over 3 years, you have lost money. You know, so that's without digressing, that's part of the challenge some of our investment instrument that is real estate linked might face. You know, so this is a time to actually go out there and get that facility. You know, with that, let me say this, that, you know, it's very funny. Let's target it. I borrow 100 million. I want to use it for a particular business because I'm dealing with foreign partners, for example. It's just a hypothetical case. I decide to convert to Forex, and the partner says, pay us next year. I borrowed 2 years ago. Say, pay us next year. I'm still servicing my interest. I borrowed at 400 naira. That's per dollar. I changed it at that time. I would have virtually doubled my money. Meanwhile, you are the one holding Abby gave me the money, for example. They are holding the short end of the stick. They are 400 is still 400, but actual value is 200. So if you are disciplined, you know what you're doing. This is the time to take your mortgage. And let me quickly also say this. Part of the argument, a lot of people, when they want to take mortgage, and this is also good for industry colleagues, they tell you that if I take a mortgage for 10 years, I would have paid nearly 3 times the value of the mortgage I'm taking. And I've spoken to several people. There's nobody that has come across my table that I did not sell my mortgage to. Because this is what I tell them. Now, you borrow 50 million for the mortgage. Yes, you're going to pay 150 in 10 years. If I give you 50 million to do business, and I tell you, give me times 2 or times 3 in 10 years' time, are you going to give me that amount of money? Yes, you say, yes, I'll trade with it and probably give you more. You understand what I mean? So essentially, the value that you're preserving is much more than what you would have paid. Your house is appreciating in value. You don't have to commit your cash up front. You can use it to do whatever you need to do. So you are gaining on both sides. So this is the time to actually borrow.
Okay, thank you very much. So this is the time to actually borrow. I would like Mr. Dipo Ade's take, please. Is this the time to borrow or is it not?
So I'm excited about what I hear because I wanted to borrow, even from a selfish point of view, because that's core of what I do. I want to give mortgage, I want to give construction finance. But I completely agree with what my colleague has said. It's a time where when people understand the dynamics of the dilemma we are in the country, then you know that you need to find a structure that works within the dilemma. You can't run from it. You either position yourself to gain from the dilemma, or you'll be with the one holding the short end of the stick, like you rightly said. Because the truth is, I don't see inflation come down, and I'll tell you why. Today, and the number of metrics to it. Today, even government is borrowing at double digits. So that's the starting point. So for finance people, when you start to talk of risk-free, when risk-free is at double digits, where will your borrowing be? So when we hear things like, oh, mortgage rate is too high, it's at 20%. The question is, where do you expect it to be? And they'll point to the US or point to all those things. And I'll tell you, check before now that inflation is rising globally. Check the 30-year treasury of US. It's probably 0 point something or 1 point something. So when you get mortgage in that environment at 2 point something, it makes sense. You understand? But here, when government is borrowing double digits, where will mortgage rate be? That's the reality of our market. But do you need to borrow now? The truth is yes, especially if you are borrowing for real estate. Because, and you know, he mentioned that fact, a lot of developers that probably didn't borrow enough to quickly front buy the materials they needed for some construction they've started, they will have a significant problem passing the cost, because you want to pass the cost to the client, quite all right. But it gets to a point where the client will be like, man, let me leave this property matter for now, because the price is getting too much. So both developers and even the off-takers needs to borrow, because inflation is going up, because prices of food, prices of raw materials will continue to go up. And when that happens, prices of real estate will also continue to go up. So it's a time to borrow. Go out there and borrow.
All right, thank you very much, sir. Mr. Latiwo, sir, I would like to know, Nigeria is a developing country, and there's so much we can learn from the developed ones around us. So with respect to the mortgage industry now, are there particular things that, maybe 1, 2, 3 things that we need to already start, like they are the game changers, they are the next, what are the things that we need to actually start taking on board to change the system and make for better efficiency?
So good question. In terms of efficiency, what we're beginning to see now is a technology coming to fore. So we've got the prop tech, similar to fintech. And this is an area where we can really streamline, we can build almost everything into the value chain. I talked about land titling. You can have a system where you automate all the land titling, and it flows straight to the developers, whereby the developers, they have access to the land, and they get all their papers from there. They construct, and the buyers can go and see everything within the system. So as individuals, you go in, you say, oh, this is my plot of land. I know all the documents are complete. Now I want a mortgage. And in the system, it gives you the options of all the lenders providing mortgages, and you can select. And then once you agree, everything flows straight to the mortgage lender. And even the mortgage lender, they can package the asset and now come to NMRC for refinancing. I'm just talking through this very quickly. But these are areas where we have almost everything within the same value chain, and we are able to streamline and reduce the cycle time and bring more efficiency. And ultimately, it's going to reduce the overall cost of being able to purchase the house and having access to finance at the same time. So that's one. The other thing it's going to allow us is securitization, whereby we have the cash flow within the system, and it's going to help for people to be able to build the pipeline and also understand what's going to flow in and what's going to flow out, and it brings more liquidity into the system. It would make the properties to be bankable, and you can quickly sell off as well, because you have everything within the same ecosystem. It helps a great deal that way. We've got other things that we're looking at, for example, the mortgage guarantee company that will help to guarantee mortgages, to say that, okay, you've been contributing, for example, to pension commission, PENCOM, and you can take about 25% of your retirement savings account and use it. And PENCOM will have access and be able to determine, to say, yes, we know, we agree, we give him the money to use for equity contribution. So that's going to reduce the amount of money you have to keep within yourself to pay. So far, you have already contributing to the pension fund. And so many other opportunities that are there. But I think I will just leave it at these 3 points. Thanks.
Thank you very much, sir. Mr. Orji, please, I would like you to also share with us, what are the game-changing ideas that we could actually start implementing in the mortgage system, please?
I'm not in a position to advise the mortgage bankers, because I'm a developer. However, I'll be expecting the mortgage bankers to begin to develop products that are for people who need mortgage, not the people that are actually focusing on now. So you find the middle class, the lower end of the middle class, people, the working class, people who actually need this mortgage. Someone who can afford 200 million naira, a 200 million naira house, a 500 million naira house, and goes to the mortgage bank and he's getting the mortgage. That guy doesn't need the mortgage, in my opinion. Reason is this: the guy could as well have borrowed money from the bank at a higher rate. But I want to buy a house of 500 million. I come to the mortgage, I pay 30% down payment, mortgage finance the balance. Yeah, I have my money. I was spend 500 million outrightly. Maybe I spend 200 million down payment. So I have 300 million to play with. Yeah, and I can turn that money and do other things. But the common man who needs that money, who earns maybe 200,000 naira, like the refinancing MD said, yeah, can't have that access. There are barely products that touch those people. So people come to us every now and then. They want to buy our properties, and we have a mortgage bank that we work with, and they ask us, and they look at the rates, comparison to other mortgage banks and all of that, and the guy is saying 17% every year. How can he afford that? Yeah, so it's beyond just the interest rates. It's looking at the peculiarities of our markets and begin to design products that fit every one of those markets, except they don't want to play in that market. Maybe they are playing to the upper class or a kind of maybe the upper middle class. Yeah, but not for the general mass market. But I expect products to come out for everyone.
Yeah, I would speak from a different perspective, and I'll be talking about titling. From my experience, I would give you an example. Many years ago, we developed an estate in Shongotedo. And after building, we got our building approvals and everything. The first buyer came, and after trying to process his mortgage through a first-generation bank, at the point of disbursement, they suddenly found out that the entire estate did not have a registered layout. The question I asked them was, what were you watching when you gave us the approval, when we completed the construction and got to this stage? I have seen that prevent people from even qualifying for mortgages. A game changer, because that's what we're talking about. We're now speaking to the government. Unfortunately, I think they're not here. One of the things my company has done for the past 29 years is to buy properties for Nigerians who want to invest in the UK. So sitting in my office 5 minutes away from here, as long as you are able to prove your income, I can get you in 2 weeks a mortgage that is the equivalent of 5 times whatever you earn here. And why do we have this confidence? Because by the time we get the property, you know that out of 200 properties, 199 of them would have solid titles. And even that single one would most likely have a title that can be cured. So that's why I decided that let me speak from this angle of the title, because a lot of us only think about the funding. Now you get the funding. Look, I know someone who ended up closing on the 3rd property that he took to the bank due to no fault of his. And these were properties that had been built, that had building approvals, but there was always something wrong with the title or the other. Because I don't want to take too much time, I'll round up with this. A particular bank that I don't want to mention here so they don't freeze my account, actually told this guy that the only instrument they will lend against, the only title, is a C of O. A registered deed of assignment with governor's consent was not even recognized. So until we really are able to fuse this titling issue, we would continue to have problems. So a major game changer is for the government to ensure they get their act right with regards to titling.
Thank you very much, sir. I would like to get Mr. Dikpo Adeoye's take, please. Game-changing ideas what's the next step?
Okay, without repeating what he has said, I think titling is documentation, that's what I'll call it. Because there's a perception that liquidity is the problem, but the reality is that liquidity is not the problem, and I'll tell you why. In the last 18 months, Abe has moved liquidity from 6 billion to about 30-something billion. So liquidity is available in the market. However, like you rightly said, documentation is the headache. And that documentation starts from that titling issue. In Nigeria, you have to look very well when you are funding properties, because you might end up just sitting in court. And when you get to court, you are there for another 10 years. And remember, the dynamics is this: for banking, you take from depositors and you lend to whoever you're lending to. Depositors take their money every year. So if you are in the court for 10 years on the property that you've given loan to, trust me, it starts becoming an issue. So naturally, when the next guy comes, you are more stringent about what you want to give. So, and that, again, I will talk to my regulators, NMRC, and all other schemes that have been done. They are laudable schemes, but I think an element that is missing in the structure of the scheme is the risk. Most of the schemes are addressing liquidity, but they are not addressing the risk. And I'll give you an example. NHF today, if I process NHF in Harvey for a customer, and I have that, so I still sign a remittance to NHF, to FMBN today, that customer can default, but I'm under obligation as Abbey to remit repayment to FMBN. So the risk is still on me, as if I'm the one giving that mortgage directly. So that way, it doesn't create incentive for you to process NHF. And that's what is happening in the industry, because the liability still sits on the PMI, like I'm doing my regular mortgage. Whereas the margin on NHF for me as a business is probably 1% or 2%. So at the headache, vis-a-vis the risk you are carrying, is not worth it. So what should happen is that all players in the value chain need to sit together, and we start thinking before we come up with interventions. We should not just assume there is one thing that is the problem, which is liquidity. Because banks have over how many trillions in this industry, in the market today. Liquidity is there. But when you don't de-risk, and de-risking comes straight from titling to performance of the developer, from off-taker, from even the off-taker that wants to take the mortgage, you need to be sure the employer will not sack the person tomorrow. So it costs through the entire value chain. So when you can de-risk some of those elements, trust me, you see massive affordability or massive availability of mortgages, because liquidity is not the problem. So tightening documentation and also creating those interventions to de-risk the market, I think those are things we should focus on.
Thank you very, very much, sir. My question is to Dr. Shea. Sir, you just mentioned documentation. Can we just shed more light on that? What documentation actually should prospective borrowers, have in place or be looking out for when they want to actually take up a mortgage or buy property?
Well, I'm sure that he would be in better position to answer that, but I'm going to say this. First of all, there are two sides. There is the property you want to buy, and there's you that wants to buy the property. Those are two kinds of documentation. For you that wants to buy a property, just like any credit, number one is, are you able to pay back? That's the number one thing. And how do you know you're able to pay back is your financial history, your salary, and that's why they would ask you for your pay slip or a letter from your employer. Then they want to verify it with your bank statement. Now, let's assume that today you are able to pay back. The other question that you will be asked is this: do you have a history of paying back? Because that you can pay back does not mean that you will or you have paid back, which is why your credit history is also part of your documentation, even though a lot of subscribers don't think about that. So your credit history is your ability to pay, which is reflected in those documents. Now, the property you want to buy, does it have a valid title? Now, I was shocked when he said a bank would not accept a registered deed of assignment. The legal team in that bank has a problem because a registered deed of assignment, like a governor's consent, is a C of O more or less. It's like equivalent of a C of O, But I would also, so that those are, in short, those documents that you need. Now, you are claiming to be a lot of things. They want to know, are you who you claim to be? That's why they ask for your ID. So that is one of the documentation that you need to, are you who you claim to be in terms of age, because they also need to know that if you want a loan for 20 years, by the time 20 years is elapsing, how old would you be? Would you be in retirement bracket, or would you still be able to earn income that you'll be able to pay? So those are some of those documents supporting those questions are the things you need to provide apart from the title, to make it easier also, or to make it more detailed. Banks could be asking you for, does that land or that development, is there a building approval? Is there all the regulatory document that a developer needs to? So when you are thinking of mortgage, you also want to ask that developer, your planning permit, is it available? Planning permit, depending on the size, some will ask for layout permits, like you said, all the documents that you need to have. But so those are the documentation that will come readily to me. But I also just want to quickly mention something. When you say about game changer or changing the face of the industry, I'm a bit very simplistic. Maybe because I'm not a mortgage provider, and sometimes when you're looking at it from outside, it's easier to see. And I'm going to ask a very practical question here. As we are seated here today, if we all get a text that says that we will give you a provisional mortgage offer in 5 hours or in 1 working day without you leaving your office, quite a number of us would attempt to even apply for mortgage. Am I right? You get a text now as we are. If you say, look, you get it, we'll give you a provisional offer. Particularly if you are buying any of the property that is pre-vetted. If I send a text to all of us here, a number of people would apply. So what I'm saying, the essence of that small exercise is to say sometimes when we make the process very simplified, very easy, and like in the palm of my hand, it can change a lot of things. You can imagine sending that same message to 5 million people who would fall into that bracket. How many people do you think, even if 1% apply, even if let's say 10% apply, and they're asking for 20 million each, that is, 10% is about, let's say 1 million. I can guarantee that even Abby will not be able to absorb the demand that will come. When you know that everything I need to do, I can do it online. I can actually apply for mortgage from the comfort of my home. So that might also, maybe it's a bit simplistic. There are a lot of other things that go into qualifying for that mortgage, but I'm just looking at generating that demand for it.
Okay. Thank you so much, sir. My final question before I throw it to the audience to ask 1 or 2 questions is to Mr. Audrey. I would like to ask, very practical here now, how easy has it actually been for you to access finance? Can you just share with us how easy has it been to access finance, and what do you think are the ways that the government can help to actually, mitigate or make the process easier, so to speak?
I think it's very, very difficult. If you ask how difficult or how less difficult has it been, so we've been in business actively for about 10 years. Up until 2 years ago, we never had the cost to talk to the banks, for financing at all. Our 2 years ago discussion was also stem out of we needed to start building a banking relationship because of where we're taking our business to. But even at that, is a different animal on its own. Assessing finance, I'm not even talking about. I've not spoken to Abe yet. But I know those my friends who have spoken to you tell me how difficult it is. That it was tougher than talking to one of the top 4s. However, as a developer, we just find we find avenues, to generate our own funds. One of the things we do as a business is majorly doing off-taking for our project. Like gentleman mentioned, they were doing a 1.1 billion project. They already have off-takers, who were committed in that project. When the prices increases, they don't change the price. Those guys are already locked in. So we try to get as many people locked into our project as much as possible. That helps us. We also know, in my opinion, the banks give money to you when you don't need it. When you have money, that's where they come to you. Everybody wants to give you. So what also happens is that we'll begin to create more appetite for ourselves. So that when they bring those money, even when we don't need it, we begin to generate projects or create things that will ensure that the money we don't just leave any money on the table. We find something good with our projects, to put it into. But talking about assessing finance in this country is tough, it's difficult. And what will government do? What would they do?
Okay. Okay. I think this is a good note to actually end this discussion. I want to thank all of my panelists. I also want to ask for, okay, you want to say something, sir? Please do.
Okay, thank you very much. First, I think you need to speak to Abe. That's very important. I think it's good to put it in perspective, to be honest. This is usually what happens, and that's where I think there's a disconnect. Most developers, when they don't need money, they bank with Zenith, they bank with the Big Four, because they want to feel good. But when it's time to access credit, you run to Abbey and the likes. The reality is that you've not built banking relationship. So the conversation will be longer than somebody that is banking with me when they didn't need money from me. Because then, what has happened over the years? Imagine if you are in business for 10 years. Imagine if Abbey has been banking you. I know your business in and out. I know the circle of your cash flow. When I'm discussing with you, I'm not discussing with you like I'm meeting you today. So the credit analysis is completely different. I've seen you, I've seen your cash flow, I've seen your credibility. Do you understand? I've seen how money even flows within your account. All those analyses helps to make the conversation very smoother and easier. And the reality is, like I told you, my balance is about 30 billion, fully disbursed. So it's not, bank money is not sitting in the bank. It means that people are accessing those monies. Developers are accessing those monies. So I have developers that have funded their project. They've done phase 1, they are phase 2 and 3 that I'm funding. So, like I said, I think it's important, even when developers don't have need for money, to develop that relationship with people that you think will fund you. Because there are some banks that won't fund you, that's the truth. Some commercial banks won't fund real estate. It is no matter what. So, but we are experts in the business. That's what I would do. So for real estate people, for developers, I would say to you, bank with mortgage banks. We provide normal banking services as well, as more as credit. So that I just want to put out there.
Okay, thank you, sir. Yes, please.
Just very quickly, 1 minute. So listening to the game changer thing that Mr. Gwinga talked about, and Mr. Dipko kind of supported, and being rounded up by Dr. Sheyi, I think it's important to note that we are really trying to work very closely with the state government through the NGF to see how we can improve on land titling, C of O, in the country. We've been engaging them. We know that C of O is less than 5% in Nigeria, which is like the other way around in Rwanda, where they have over 95%. But with this, we also bring in technology to the front in terms of helping out with the value chain. And I believe you probably have seen House Africa, and Freke, who is here in the audience, is a startup. They're working with NMRC to see how we can really streamline this process. It's very important. Without the C of O, it's difficult to really get a mortgage in Nigeria. So that means effectively we have less than 5% of our properties with C of O, that means you cannot even take mortgages more than 5% of the properties that we have in the country. So it's important that we understand how to leverage on this. And I will be looking at the developers into real estate to take advantage of this and see how to key into it very well right from the onset. Thank you.
Thank you very much, sir, for balancing the discussion with that. Thank you so much. I don't know if there's any question from the audience, one or two. We can still take. Okay, we have one on that side. Any other persons? The second one. Thank you. Please introduce yourself, and if you would like any of the panelists to take your question.
Thank you so much. Once again, my name is Edmond Anoze from Optiva Capital Partners. My question goes this way. We talk about mortgaging. I think it's a means to, reduce poverty, also to enhance infrastructural development by getting money from the banks. So, but, when you talk about this, I think one of the challenges we also have in getting a mortgage from these banks are the interest rates. And I was expecting something to come from that. Because most times, you find out that the interest rate is always high. And at the end, it's not accessible. So is there anything that we're doing to cut across these interest rates from the mortgage bank? And also, then another question is about the online things that we're always seeing now. Is there any plans to put security in place for such? Thank you so much.
Okay. So, anyone?
So from NMRC, what we're trying to do in terms of reducing this, and I'm going to start from when we started operations in 2015. Like I mentioned earlier on, interest rate was like between 22% and above. But since we came in and we've been providing liquidity by getting a cheaper fund from the capital markets, we've been able to assist our member banks to really get this down by at least 5%. And it can even get better. It can get better. But the challenge is, we cannot really get money lower than the MRC, that's the monetary rate coming from CBN, also the inflation rate. The inflation is very high, like somebody already talked about, and these are some of the key things really affecting the interest rate. Even if we get the money, the fund at, say, 12.2%, the mortgage lenders that will be providing the mortgages will still have their own markup for their administrative cost and other things. And that's where you're going to be seeing it between 15.5 or 17.5 now. So these are some of the challenges we have. But if there's a way, even the MRC can come down. We're trying to target single digits. We got there very briefly, end of 2020, I believe, and early 2021. But very quickly, the thing kind of moved back up. So these are the challenges that we have. I don't know if Mr. Adepo.
Well, at the risk of being called a pessimist, first of all, financially or economically, it doesn't make sense. I still don't know how we do double digit. That means somebody is losing money somewhere. If you are doing single digit mortgage, somebody is subsidizing it somewhere. So it's going to be difficult. Beyond just inflation, when you are, let me just backtrack a bit. Mortgage is like what everybody see. There's a whole lot of activity behind that mortgage. And a major one is getting money to fund the mortgage. Now, and I'm going to throw it to all of us. If I come to you to borrow money, even if NMRC come to you to borrow money, and they tell you that they will pay you 8%, a lot of people will not invest in that instrument, right? Because generally, we MMM has actually corrupted our expectation in terms of return. So if the retail investor, you now, for example, will not take an instrument that gives you 8%, 6%, so how do we expect the person who is going to the capital market to raise cheaper fund to lend to people who want to take mortgage? But beyond inflation and all, risk of the environment is also priced into any instrument. This is Nigeria. There's a lot of policy instability, a lot of challenge in the economy, so it's even difficult to price reasonably. So a summary of my whole story is we shouldn't expect miracle in isolation. We should look at whatever price we have in terms of mortgage as part of overall environment where we operate. It's going to be tough for now to have single-digit mortgage. You know, I know NHF is doing something in the region of single digit, but, you know, significantly that is subsidized somewhere. So it's going to be tough. Maybe a miracle will come in 2023, 24, and then we suddenly discover that we're doing single one. But in terms of practical term, we need to make it clear. It's not likely we're going to have anything. In fact, it's going to be mid to high double digits. And that is the reality that we face.
Okay. Thank you so much, sir. Quickly take the second question. Briefly, please.
Okay. My name is Adewale Da Silva. I work for Escort Realty. So I have 2 questions this afternoon.
We're taking one because of our time, please. Apologies.
All right. So I want to know, as regards the NHF and mortgage, I mean, what is the real relationship? Because I have a couple of friends that work in the corporate firms, and really, you just see that employees have actually charged your NHF, and they don't really know what's up. I mean, the accessibility of the fund. I mean, is it instantly? Because I understand that pension funds are actually at your retirement. So I want to know, like, the NHF, are the funds are they accessible instantly, or what's the time frame for accessing the funds from the NHF?
Okay. Thank you very much. Sir, please.
Thank you very much. I'll just address that. Just to give you understanding of the relationship. So FMBN, Federal Mortgage Bank of Nigeria, they're the one handling NHF. But they give you the NHF loan through a primary mortgage bank, like Abbey, right? So you go to a primary mortgage bank, show your interest that you want to access NHF. Now, Abbey would get all the documentation and send to FMBN. Now, the thing is, it can't be done one-on-one, one after the other. It has to be bulk, because they want to disperse to Abbey in bulk as well. So you have to probably wait for a number of people, then we'll collate and send to FMBN. Now, FMBN have their own internal process that is independent of Abbey. So they'll go through their process, do all the assessments, they take their own time, and I won't mention timing to that. So it depends on when they are done with their assessment. Then they are able to disburse to a primary mortgage bank, to Abbey in this case. Then we'll be able to on-lend. So the timing has to do largely with how quickly they can round up their own internal process and be able to disburse to Abbey. Just to give you a sense, I think we've been on a batch of that NHF since last year, and we've not yet gotten disbursement at the moment. What I had to do for my client was that we had to now give them a commercial mortgage as a bridge so that they don't lose the property that they want to access. So that then when the NHF disbursement comes, then we can then close that bit and they're able to just continue with NHF. So that's the process.
Okay, sir. Because of time, okay, then we'll have the very last comment from Mr. Olatunwo. Briefly, please, sir.
Let me just summarize this way. You can apply for NHF now. It might take you a year to get it, but you can apply. You don't have to wait until retirement to actually apply for it. This is the time to apply. If anybody is actually contributing, please apply today, preferably to have a mortgage.
Thank you, sir. Mr. Olatunwo, the very final thoughts on that, please.
Okay, so on NHF, just like the rightly mentioned, it's been managed by Federal Mortgage Bank of Nigeria, and this process is initially very simple, but all the internal things they do could be a bit more complex. So the first thing is you must be contributing and you must be a contributor for at least 6 months. Then thereafter you can apply. When you see a property to buy, you get the letter of offer, then you approach the primary mortgage bank, like Abbey as an example. They will help you package it, get all your details, your documents, your salary and everything. And you probably have to also register with them to have an account with Abbey. because they're not going to follow it up for you if you don't have an account with them. So you have to be one of their customers. Thereafter, they put it in the batch of about 5 or 10 and now sent to FMBN. Now, the internal process within FMBN might take 1 year, 2 years. Personal example, even though I know all the hierarchy there, I applied since 2018, got the board approval in 2019, till date, it has not been disbursed. But perhaps because I've not been following up. But again, why should I follow up once I register and I put in and I have all the details? But just to give you an example of what could happen. But I believe some people are getting it. Now, you have a maximum of 15 million that you can take from them, and I think there's no minimum anymore. They've also made it easier for people that would like to take minimum of 5 million to say you do not need equity contribution. So with 0 down payment, you can get 5 million. But then the maximum you can get is 15 million. So if you want to buy a home that is more than 15 million, be ready to pay some money from your pocket, as well as the equity contribution of 20%. Thank you.
Thank you very much. Can we just give a round of applause for our distinguished panelists here? They've been so kind to share their wealth of experience with us and knowledge with us. If there's anything that you've gained today, is that the time to borrow is now. So on that note, I'd like to thank everyone again and thank my panelists. Thank you so much.
Ladies and gentlemen, all good things come to an end. So, this ends tomorrow, and hope we'll all be here. The booths are still open, so you can pay a visit to each one of them. A big thank you to Ackland, Purple, and our other silver sponsors for making today a great day. We're looking forward to all of you tomorrow. Safe trip back to your homes or your offices, and do have a great day. Thank you.
In an increasingly changing and uncertain economy, how informed are you on the government policies, shifts in the business environment, or investment opportunities? At Business Day, we don't just inform you, we empower with intelligent insights and analysis that keeps you ahead of the competition and well-positioned to take advantage of opportunities whenever they arise. Join our exclusive community of Business Day subscribers and receive unlimited access to our award-winning content on desktop, mobile, and tablet devices, and get access to our daily e-paper. Visit www.businessday.ng/subscribe or email subscription@businessday.ng today to get started.
Delight was actually started to tell innovative, exciting, and positive food stories out of Lagos, Nigeria.
Being the foremost luxurious goods company in the entire West Africa is a big deal.
Will you have every opportunity? No. But you see, the opportunities you lose on account of your value system, that's your opportunity cost for what you believe, and is the price you must be willing to pay.